Trading, here are your headlines. Vaccine boost, stocks in Asia and futures climb after the FDA gives full approval to the Pfizer vaccine, raising hopes for a sustained economic reopening. China's tech stocks rebound on buying from Cathie Wood and Tencent. Didi puts the brakes on its plans to expand into Europe, though. Plus, Biden faces calls from his closest allies to extend the evacuation deadline in Kabul. We'll bring you all of the details from today's G7 meeting. Morning, everybody. 20 seconds to go then until the start of the European equity trading session. And we have European equity markets futures pointing to the upside. And actually, these futures have improved a little bit as we've been going through this morning's session. Some of them were fairly flat just an hour ago, now looking a little bit more positive. US futures also picking up a little bit. We're now up by 0.4% on E-mini futures. NASDAQ futures up by 0.5%. But that's the US. That's for later. Let's focus in on the start of the European trading day. And European equity markets then getting off to Tuesday morning start, and I won't call it a flying start because even if we do see moves to the upside, unlikely to see high volumes as this is the height of summer, we're told. Up by 0.1%, even though the weather outside does not indicate so here in London at least. The FTSE 100 up by 0.1%, and the Stock 600 more broadly up by 0.2%. The IBEX over in Spain up by 0.25%. The CAC 40 up by 0.5%. So some strength coming through on these European equity markets following yesterday's strength. European stocks up the most in 3 weeks in yesterday's session as we continue to stage a bit of a rebound from the selling of last week. So Asian stocks followed their US counterparts higher on US vaccine optimism and ongoing central bank support expectations. Meanwhile, investors are looking ahead to the Jackson Hole meeting on Thursday for tapering clues from the Fed. Joining us now is Tim Graff, State Street's head of EMEA macro strategy. Good morning to you, Tim. Very nice to have you with us this morning, this Tuesday morning on the program. Let me ask you about sentiment then for risk assets at this point. How bullish are you on global stocks? Sure. Given the backdrop, you know, a list of things to be concerned about, apparently, but we seem to climb that wall of worry and take stocks to new highs. So how do you rate this recovery in global stocks we're seeing?
I think it's something of a bit of a relief rally. You know, as you mentioned, there were peak growth concerns. There were concerns that the Fed may respond a little bit more aggressively to the high inflation prints we've seen and the stronger labor market report we had last month. But at the end of the day, I think some of this is down to the fact that we're coming off an extremely strong quarter for earnings. And actually, that more importantly, the outlook still looks relatively constructive particularly for IT, for industrials, for materials companies. You have infrastructure spending plans that are on the way. And so I think the reflationary outlook, certainly, we've had bits of pullback because you have had Delta variant spikes in cases in various countries. You've seen that delay policy normalization as we saw last week in New Zealand. And that always gives rise to some worries, as you mentioned. But the backdrop overall across the broader global economy is still relatively robust. And you have a policy framework globally that outside of emerging markets is overall very, very supportive for this type of reflation to continue, absent these hiccups we get every now and again.
So are you buying into those reopening trades, Tim? And if you are, does the full approval by the FDA of the Pfizer-BioNTech vaccine, does that give you even more reason to buy into those reopening trades? Because some are suggesting, whilst it might not seem material because so many people have had the vaccine already, the fact that we get official approval might give governments around the world a little more confidence to push for vaccine mandates, for example, and therefore add strength to that reopening impulse. How are you playing that?
I don't think it's certainly a negative. It's certainly not a negative in my mind. I do wonder if the hesitancy in taking the vaccine, from those who have access to it, at least, if this probably isn't going to change the game too much for them. But the point you bring up about governments being much more comfortable with procurement and enforcing vaccination mandates of some stripe, it probably does help. I suspect, though, the recovery we're seeing is much more down to the factors I mentioned around earnings and the policy environment. But certainly, it's not a negative. That's for sure.
And European stocks, how do you expect the reopening trades to play out for European stocks? Because that cyclical push that could, a lot of people have looked to Europe but to express that view, but maybe a lot of that has been done already. So where do you stand on European stocks with that reopening trade in mind, Tim?
Sure, there's a fair bit in the price, as you mentioned, but we still do like them because of the concentration, particularly of industrials within European indices. And the normalization that you'll tend to see eventually through interest rates and the high concentration of financials within European indices and the value in financials as well leaves them more attractive. But it really it's that cyclical component that still appeals to us where we don't think that's fully priced. We do suspect the earnings outlook for a lot of these European corporates and the investment outlook in particular with a lot of these cash-rich corporates in Europe is still very constructive for the medium to long term. So Europe is a region we still definitely do like.
So, Tim, if you're quite positive about cash-rich corporates in Europe, about profitability in Europe, where do you look for warning signs, if you like? I mean, I was looking at one this morning. This maybe is more US related, but still, I wondered if it registers on your radar. Is there a warning in credit markets? One of my colleagues was asking. US high-yield bonds, we've seen spreads widening for the seventh week in a row. They're still tight versus history, of course, but there is a sense that perhaps some people are worrying more about corporates from that perspective. What are the worries that you keep a close eye on?
Yeah, I don't think corporate credit yet is the issue. I mean, it always is the case that complacency and stability breeds instability, the old Minsky model of thinking about things. But looking at corporate balance sheets, the ability to fund current debt is not that impaired. And I don't think we've seen exuberance on the level we've seen yet in past credit blow-up cycles. And so I wouldn't necessarily look there. I think the worry for us, and one where we've had to adjust thinking, is the notion of crackdowns on corporates in emerging markets, particularly in China. We've had to neutralize views in EM Asia as a consequence of that, because it's not to say that the environment is so unhealthy were these concerns not there. We still like corporate IT and tech. But it's that unknown, and it's the inability to really see the future. Not that we have the ability to see the future in the best of times, but it's that uncertainty that you layer onto it compared to, say, developed market IT, where you don't have those concerns. That's a warning sign for me, as well as COVID. I mean, COVID is still going to affect emerging markets in particular in ways we don't quite understand yet, and so that's something we always have to keep our eye on.
Okay, an inability to see the future in Chinese tech. We'll certainly pick up on that conversation next then, Tim. Thank you. Stay with us. Tim Graf, State Street's head of EMEA Macro Strategy, with us this morning on the European Market Open. And coming up on this program, Chinese tech stocks rebound on buying from Cathie Wood and Tencent. We'll take a look at that story next. This is Bloomberg.
Has been looking at West Palm. They have been looking at outside of New York for offices. How are you thinking about your footprint as people return to the office and want to work from different places?
Yeah, so it's the new Apollo. I think flexibility is the name of the game. When it comes for us in our business, I think that we've really preached the mantra of flexibility. I think we've proven throughout COVID that we could be highly effective. In fact, if you look at the bottom line, I think more effective than we've ever been in our history through a flexible work environment. So as we head back for the fall, we've really preached to all of our businesses to lean in and embrace this flexibility and go where the market goes. You know, we're in a competitive industry. Our portfolio companies are in a very competitive labor environment. And I think businesses that just want to go back to the way things were are missing a huge opportunity to learn from what's gone on over the last 18 months.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We have seen the regulatory compliance wave in China happen every 3, 4, 5 years. And obviously the markets have sell off at the time. But very quickly afterwards, the markets have recovered and gone to new heights. So I think we got to look at this process that the Chinese regulators are going through in the prism of the last 10 years and also across other markets in the world. There's been a lot of criticism of China in terms of lack of compliance, of lack of regulatory oversight. So they're now exerting their regulatory oversight. So we criticize them on the other side as well.
That was Henry Fernandez, the chairman and CEO of MSCI, on the outlook for Chinese equities. And let's stay with China, where technology stocks rallied for a second day as sentiment was boosted from Tencent's buyback and as Cathie Wood bought back into JD.com after a strong set of results. But Beijing's crackdown on tech firms persists as the ride-hailing giant Didi shelves its European expansion plans amid ongoing drama with authorities. Tim Graff, State Street head of EMEA Macro Strategy, is still with us. Tim, you were referencing this just before the break, the sort of opaqueness, the opacity of the Chinese tech investment story right now. We just heard, though, from the MSCI boss who was saying, look, this happens every 3 to 5 years. We get a bit of a clampdown, an uptick in regulation, and we want better regulation of certain sectors in China, so maybe we shouldn't be too critical. Do we need to keep in mind that long-term perspective, or do you think this time is a bit different, what we've seen in recent weeks from China?
It's a fair point. I would just point out that it's something that other tech sectors, and look, there's regulatory scrutiny of tech in the U.S. as well, but I don't suspect it's going to be to the same level as what we've seen already from China. And it's that question of, when you think about it on a relative basis, why worry about it in the U.S. When you look at the U.S., where the investment outlook for tech is extremely strong. Again, these are very cash-rich corporates who have the ability to invest for the future and who have that productivity element to them that make them more attractive in our mind than where you have this regulatory opacity you mentioned. So it's not so much that the sector is dead and that everything has changed, but that there are opportunities out there that offer you the same sort of earnings potential, the same sort of growth potential, the same sort of investment potential without that relatively more opaque regulatory environment.
And this isn't just about technology, though, is it? The clampdown that we've seen, the changing, shifting regulatory environment in China has not just been about technology, Tim. It's been broader. We've seen, just looking at some of our reporting around the Chinese leadership and the language they've been using as they try to assert themselves on the Chinese economy. Common prosperity has got a lot of mentions in 2021, a real focus on the wealth gap. I wonder, from a European perspective then, which are the companies and sectors that you think will be the most troubled by that kind of push by the Chinese? Clearly, we saw luxury goods companies caught up in this last week and then recovering to some extent in the early part of this week. Which are the sectors in Europe, do you think, that are sort of rethinking their opportunities for growth in China?
In Europe, I mean, the risk we have is that we favor industrials, and that's much more, or that is as much a global story. But of course, China is such a driver of the global growth engine. And so to the extent to which the Chinese corporate sector and the investment demand you get from that portion of the economy is constrained. And that is also a big unknown. Is just, we know there has been more constraint on credit and credit expansion in China. And that impact on the corporate sector so far hasn't hurt Europe unduly. But if that is to become a bit more onerous, I suspect that is where Europe is a little bit more vulnerable, where the more communitarian approach to the domestic consumer, perhaps they're a little less exposed. Discretionary is probably a little bit vulnerable when it comes to European corporates and their ability to service Chinese consumers. But I suspect it's much more, the impact is going to be more perhaps broadly felt at a smaller level than that, where it's much more domestic demand focused on China as opposed to the import sector that might be a little bit more vulnerable.
And Tim, how concerned are you that European corporates that you favour, and thinking about those industrials that you like, how concerned are you that the supply chain issues that some of them are facing will persist? Looking at all kinds of measures of abnormality, if you like, in shipping costs, in freight rates, in the cost of the Baltic Dry Shipping Index, for example. Some people say that's pretty misleading, but at least these are signs that things are not perhaps very normal, and we've seen the closure of certain ports in China. Maybe that's starting to normalize. But how much does this threaten the industrials that you like in Europe?
So far, I don't think too much, because it doesn't appear, at least yet, that this is being impacting margins. It's being passed on to the consumer, and we're seeing that in inflation indices. Our own metrics that we have of real-time inflation suggest that these inflationary pressures we all expected to roll over, say 2-3 months ago, really aren't going away, and price indices continue to rise as a consequence. And in the last few months, that remains the case, even though, as I say, we expected some more moderation. And so, if it's happening at the top line, corporates aren't necessarily going to feel that impact until they perhaps start to pass that on, until they start to absorb it into margins, I should say. And we just don't see that yet. As I say, we've come through a very strong earnings season, and the outlook for Europe remains fairly robust on that note. But if that is to change, when it comes to impacting margins, then I think you'll see the rollover. But it doesn't seem like we're there yet.
Just looking at some of your conviction trades, we've talked about how much you favour US and and EU equities. Is that against Asian equities? Is that because of the opaque nature of the Chinese regulatory story around tech? What's driving that?
Yeah, it's primarily the underweights we have are really kind of Pacific ex-Japan, which is really kind of Australia, where you have a banking story and a domestic slowdown story as a consequence of COVID and lockdowns. That's really underpinning that. That's probably the main driver. It's not to say that the China story, in our view, is negative, outright negative. It's more neutral relative to the US and EU. So that's really the primary driver of it.
Tim, thanks very much. Thanks for joining us. Good to speak to you. Tim Graff, State Street Head of EMEA Macro Strategy. Thanks for spending time with us on the European Market Open. Let's take a look at some of the stocks that are on the move this morning, and we'll start with the read across into Europe of the Chinese tech latest moves. We've seen Tencent is bouncing in Chinese, as one of the Chinese equities that is bouncing this morning, and that has a read across into Europe. The Dutch listed Prosus, of course, owns a stake in Tencent, and so as a result, that stock also moving higher, up by 3% this morning. Let's go to the commodities space, also has a Chinese angle to it, of course, but BHP, London listed, iron ore prices have really been flying this morning, and so we see some of the mining stocks doing quite well, up by 1.4% on the BHP share price, and we seem to be all about the upside this morning. Let's get to Dark Trace. That stock, at least last time I checked, was up by more than 2%, and it continues to be up by 2.3% right now on the cybersecurity business Dark Trace. We saw that, we talked earlier about how cybersecurity stocks in Europe and the US could be active, as we saw Palo Alto Networks jump in US extended trading on the back of its revenue forecast. That topped estimates, that set a higher bar perhaps, or at least raised expectation for some of these European listed cybersecurity businesses. Let's get a Bloomberg Business Flash. For that, here's Laura.
Thanks, Anna. US President Joe Biden says full approval of the Pfizer-BioNTech COVID-19 jab should clear the way for more private companies to impose vaccine requirements for staff. The FDA granted clearance for the shot for those 16 and older as US average daily COVID deaths topped 1,000 for the first time since March. It's the first vaccine to be fully approved by US regulators. Bloomberg has been told that ride-hailing company Didi has suspended its European expansion ambitions. The move comes partly because of concerns over how the Chinese firm handles passenger data. A source says the plans to challenge Uber in the UK, France and Germany have been paused for at least a year, and that some jobs will be lost. Richard Branson's Virgin Orbit is going public in a SPAC deal that values the satellite launching company at $3.2 billion. The merger with NextGen Acquisition is expected to provide the new company with $480 million in cash, bolstering its capital until regular launch operations are expected in 2023. Boeing is among investors putting $100 million into the company. Campaigners have singled out the big accounting firms for failing to highlight green issues as protesters gather in central London. Hundreds of Extinction Rebellion supporters assembled in Trafalgar Square on Monday as they started 2 weeks of protests over climate change. The group says accountants are complicit in greenwashing. That's the Bloomberg Business Flash. Anna.
Laura, thank you. Laura Wright here in London. Now, coming up on the programme, Europe is a rare bright spot in the aviation industry, and its airlines are capitalising on high inoculation rates, the use of the COVID pass, the green pass, to get around Europe, making travel more accessible, it would seem. More on that next. This is Bloomberg.
What would be the skill set that a CEO really needs to be successful in today's environment?
So I think a good leader needs fundamentally good character and, frankly, perseverance. You just have to never stop.
What were the numbers from the equities division? How well did it do?
Well, first 28% decrease as compared to a very, very good Q2 in 2020 is a good resilience, and it's a decrease that is much smaller than the one we have seen with some competitors.
Welcome back to the European market open. 22 minutes into our European trading session, and we're making modest gains, decent gains maybe you'd call them, across European equity markets. Up 0.2% on the FTSE 100, a little bit more than that elsewhere. Let's get to the latest on the aviation sector. Europe is proving a rare bright spot for the industry, with other key markets knocked by the Delta variant. The continent, the only place where vaccine passports are now widely used, was a laggard for most of 2020, but airlines such as Ryanair are now capitalising on high vaccination rates and ramping up capacity. Joining us now is Bloomberg's Sid Phillip, who's with me here on set in London. Sid, really good to speak to you. So it seems Europe's time has come then in terms of travel and opening up travel, because we've been through the Delta wave. We've still got the Delta wave with us, of course, but we've been living with it for a while. And we've seen the introduction of vaccine passports, certainly within the Schengen area, and maybe being used more widely. So just how much of an advantage is Europe playing here?
So at the moment, Europe is actually being the rare bright spot for aviation, primarily because of vaccine certification, which has allowed them to reopen. And Europe has seen, obviously, a massive spike in vaccination rates, and that's caused more and more people to be more confident about traveling. Remember, it's still far away from 2019 levels, but it's coming up, and essentially it was a third of 2019 levels in April, and now it's 2/3 of 2019 levels. So it is bumping up slowly, but it has been the rare bright spot in an industry otherwise hemorrhaged by the Delta variant.
Yes, and I mean, so at the margin, we're seeing Europe expand. I just saw, anecdotally, SAS yesterday adding to capacity, another European airline doing that. So that's the direction of travel for European airlines. Where are we seeing airlines having to cut back then, because demand has not been as strong as anticipated?
So it hasn't really, it's been a question of both demand as well as travel restrictions. So in Australia and New Zealand, you have travel restrictions brought on by the countries going back into lockdown, whereas in countries like the US, while there aren't any travel restrictions, Southwest Airlines indicated this month that it is seeing weaker bookings because of the spike in Delta variant, which is causing people to just hold off on booking holidays.
How much of a success then have the vaccine passports been in Europe? Is that something that's really making the difference?
It is, especially for short-haul travel. Remember, long-haul travel depends on other markets reopening, and that hasn't really happened at the moment. I mean, airlines have been lobbying for the US to allow European and British tourists back in, but so far the US has held off on lifting restrictions, even though on the other end, Americans can come into Europe and the UK.
Yes, tell me a bit more about the US situation then, because, this is the world's biggest domestic travel market, the United States. And are we seeing, is it the case that people are just more reluctant to travel, or is it, as you point to, regulatory change? What's driving the change there?
In the US, it's mainly due to people being reluctant to travel, as well as business travel not really picking up because of the fact that, the Delta variant has postponed many return to office plans, as well as the fact that you have fewer business travelers, and because of that, far fewer people are flying.
Okay, Sid, thank you very much. Thanks for joining us. Sid Phillip, who covers airlines aviation for Bloomberg. And if you are trying to figure out where to go on holiday this summer, it is still just summer here in the Northern Hemisphere. Bloomberg's Travel Reopening Tracker ranks more than 1,500 travel combinations between 40 major business and tourism destinations, taking into account coronavirus restrictions, vaccination levels and public health rules. You can find that on the Bloomberg terminal or on Bloomberg.com, and I am reliably informed it's updated weekly. And if you input your origin and your destination, it will tell you just how easy, difficult, or otherwise it is to get from one place to the other, as indicated by the smiley face or the very sad face if you're about to embark on a journey that is ill-advised. So that's the travel sector. Let's talk about where we are in terms of the Afghanistan story. US President Joe Biden faces calls from his closest allies to extend the evacuation deadline in Kabul. We'll bring you all of the details from today's G7 meeting, at least a preview of that meeting. Coming up next, we get into a conversation about how high expectations should be for some kind of extension to get both the vulnerable Afghans and also military personnel out of Afghanistan. The deadline, self-imposed deadline set by the United States for the end of this month. We'll see whether we get any push towards extending that or not. That will certainly be one of the big conversations going into the G7 meeting taking place today. This is Bloomberg.
会場に行って観戦するということも難しいお子さんがいるんです。このように冷房の効いた香港の体育館の中で、それこそ大会の最前列で観戦ができる、体験ができる、こういうことをとてもありがたいことだなというふうに思っていますし、この技術に感動しています。予想以上に子どもたちの反応が良かったというのはですね、とても校長として嬉しく感じております。この子どもたち、どれだけオリンピックの心待ちにしていたのかっていったことがよくわかるような今日の表情です。
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open this Tuesday morning, half an hour into our European trading session. And European equity markets making some modest gains to the upside, up by 0.2% on the FTSE, a little bit more than that on some of these other markets. Let's have a look at where we are on the sector breakdown. The GRR function on the Bloomberg does that for us. And you can see travel and leisure to the upside. We were just talking about the travel stocks and the European story around travel looking fairly favourable compared to other parts of the world, not compared to its own history, but compared to the other parts of the world at the moment. The direction of travel seems to be for more capacity and more reopening. So we see travel and leisure up by 1% today. And more broadly, markets do seem to be looking at European equity markets right now, which are on track for their best month since March and are close to regaining record highs. That's despite the slide that we saw last week. And we've had a slightly better data picture coming through. The PMIs were fairly strong, even if they didn't meet expectations for manufacturing. Those expectations were pretty lofty, pretty high. And we got some German data out this morning that came in better than had been anticipated. All of that, plus a rally in Chinese tech stocks, all of that adding up to some positivity this morning for European stocks. Let's get a Bloomberg First Word News update. For that, here's Laura.
Thanks, Anna. The US Vice President says Beijing poses a threat to countries in Asia and is using coercion and intimidation in its territorial claims in the South China Sea. Speaking in Singapore, Kamala Harris laid out America's vision for a region built on human rights, freedom of the seas, and unimpeded commerce.
Our engagement in Southeast Asia and the Indo-Pacific is not against any one country, nor is it designed to make anyone choose between countries. Instead, our engagement is about advancing an optimistic vision that we have for our participation and partnership in this region.
US President Joe Biden says full approval of the Pfizer-BioNTech COVID-19 jab should clear the way for more private companies to impose vaccine requirements for staff. The FDA granted clearance for the shot for those 16 and older as US average daily COVID deaths topped 1,000 for the first time since March. It's the first vaccine to be fully approved by US regulators. Campaigners have singled out the big accounting firms for failing to highlight green issues as protesters gather in central London. Hundreds of Extinction Rebellion supporters assembled in Trafalgar Square on Monday as they started 2 weeks of protests over climate change. The group says accountants are complicit in greenwashing. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you. Laura writes in London. Now, G7 leaders will meet today at a virtual summit to discuss the crisis in Afghanistan. US President Joe Biden faces calls from his closest allies to extend the August 31st evacuation deadline in Kabul as fears grow that the fast-approaching cutoff will create even greater greater chaos. Joining us now is Sir Adam Thompson, Director of the European Leadership Network. And we welcome you to the programme, Adam. 38 years diplomatic career with the British Diplomatic Service before that. And so we welcome your insight and expertise on this subject. Adam, how likely do you think it is that we will see the US extend this deadline? They'll be mindful, of course, of the fact that the Taliban has said that this is a red line for them.
Well, you've just put your finger on it, Anna. It's not just up to Joe Biden to decide whether the military evacuation can continue. The Taliban have more or less an absolute block on this because they can stop people getting to the airport and make any evacuation effort pointless. So it's a delicate moment in American negotiations with the Taliban. They have to reach some kind of compromise that may be a mixture of continuation of military operations for a day or two, and then a transition under some Taliban assurances to commercial flights for those who still want to leave Afghanistan. It's hard to imagine that the military operation can get all the Afghans who want to leave Afghanistan out, but the Americans still have Americans who need to be evacuated.
This is very much about Afghanistan. That is the purpose of this event. It has been called to discuss that subject. But within the G7, they perhaps will be talking about what has led them to this point and a perception that maybe there was a lack of cooperation within the G7. Is the G7 hurt by this, by the fact that many members feel they were not kept well enough informed of US intentions?
I think the G7 has been damaged, probably not as much as NATO has been. It was a NATO operation in Afghanistan, not a G7 one, but every G7 country had troops and sustained effort over many years in Afghanistan, and that has come to naught. So there will be, I think, quite a deep reflection. As I say, it's a delicate moment. You can imagine this tipping very badly if the Americans cannot reach a compromise on evacuation with the Taliban and the world moving to sanction the Taliban. But on the other hand, there is a somewhat more positive picture if compromises can be found that allow Afghans and foreign nationals to depart, that might lead in time to a conditions-based recognition of the Taliban rather than the sanctions that would presumably cut off Taliban cooperation with the international community on counter-narcotics, counter-terrorism, controlling illegal migration, and so on.
Do you really think there is a prospect for conditions-linked recognition of the Taliban leadership, Adam? Given what we know about the history, do you think that there is the prospect that I suppose that they can remain open to international financial flows if they behave in a certain way? Do you think that would be a big enough incentive for the Taliban to behave in a way that the West would deem to be appropriate?
It's really hard to judge, and my impression, looking at this from the outside, is that at least some of the Taliban leadership do actually want international recognition and a relationship with the international community that, as you say, allows humanitarian aid, larger financial flows, maybe even foreign investment other than from China, to come in to the country. They have learnt a few things in 20 years in exile, but whether they can overcome their instincts about a harsh version of Islamic law, whether they can control their foot soldiers, I think is still very much to be seen. So it's absolutely right for G7 leaders to say that they will judge the Taliban by their actions and not just their words.
We see some voices in the United States suggest that foreign policy goals have been met in Afghanistan, Adam, over the past 20 years. A reduced threat from al-Qaeda is often cited. Do you agree that achievements have been made on that front, on those foreign policy goals? And if they have been made, can they be maintained, or will we see a resurgence of some of the threats that existed pre-2001 in this area?
I think on the point you make, it's very debatable whether invading Afghanistan and trying to occupy it for 20 years was the only way of getting rid of Al-Qaeda and diminishing its effectiveness. Its leader was killed, Osama bin Laden, by a special forces operation in Pakistan. It wasn't in Afghanistan. What I think the international presence has done is change Afghanistan quite a lot in those 20 years in some quite important ways that ordinary Afghans will not want to lose, including, for example, healthcare and very substantial foreign financial flows. And the Taliban may feel some need to listen to that and recognize it. It's encouraging as far as it goes that they are reported to be in discussions with former Afghan President Hamid Karzai about forming a composite government, not just a completely Taliban-run.
What have we learned through this episode, Adam, through the past 20 years then, about what it takes to build sustainable democracy? Because many people cite the achievements that have been made over 20 years, but if they are not sustained without foreign presence, you wonder what the future holds. What have we learned about the process of trying to build democracies overseas?
Well, I think that's a great point that I hope, if not at their meeting today, then in future G7 and NATO leaders will reflect very deeply on. It's not just about learning that you shouldn't start wars you cannot win, but also learning that it takes more than one generation to transform a foreign country's culture. And the British, of all people, should have learned that about Afghanistan. It's just a problem of democracies that we're in so much of a hurry on our 4-year election cycle to see results when it's really a matter of much more patient cultivation over decades and decades if you want people to move in our direction.
And it seems in this case it would have taken more than two. Adam, thank you very much. Thanks for joining us. Sir Adam Thompson, Director of the European Leadership Network. Thanks very much for giving us your thoughts today. Coming up on this programme, hedge funds are apparently hot again. The industry is off to its best start since 1999. But investors risk missing out. More on today's big take story next. This is Bloomberg.
We talk about those NPLs. Will they stay high?
As all of you are very fully aware that the second COVID wave hit India hard and hit India suddenly. So obviously, I would say almost 50 days of the quarter were impacted in a very significant manner. And that has come through on the retail portfolio side. So while all the banks and financial institutions saw higher than expected retail slippages during the quarter, but we do believe it is transitory. We expect moderation in the second half of the year. We've already seen positive trends come through in the second half of June, and July has been much better than June, and I think the same trend has continued in August also. The demand resolution, which was 98%, is already reached 99.5%, or what I would say pre-COVID levels. There is a 26% year-on-year recovery, improvement in recovery.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Absolutely. He's done a terrific job. He has the whole FOMC behind him. I think he's articulated what the Fed's policy is in a very clear and consistent way. So I don't see any reason why he wouldn't be reappointed.
That was the former New York Fed President Bill Dudley there saying he would support Jerome Powell for a second term as Fed chair. President Biden will decide who to nominate for the next four-year term at the Fed around Labor Day, with Powell favored for renomination. Let's get a Bloomberg Business Flash. Here's Laura.
Thanks, Anna. The boss of the world's biggest index provider has shaken off concerns about the investability of Chinese stocks following Beijing's recent crackdown. In an exclusive interview, MSCI Chief Executive Henry Fernandez told Bloomberg TV that China's markets have quickly rebounded in the past.
Clearly, we have to see how it all shakes out. But I think it's important to keep in mind that, countries go through periods like this. There's no country that is exempt about this, including Western countries.
Bloomberg has been told that ride-hailing company Didi has suspended its European expansion ambitions. The move comes partly because of concerns over how the Chinese firm handles passenger data. A source says the plans to challenge Uber in the UK, France and Germany have been paused for at least a year, and that some jobs will be lost. Richard Branson's Virgin Orbit is going public in a SPAC deal that values the satellite launching company at $3.2 billion. The merger with NextGen Acquisition is expected to provide the new company with $480 million in cash, bolstering its capital until regular launch operations are expected in 2023. Boeing is among investors putting $100 million into the company. That's the Bloomberg Business Flash. Anna.
Thanks very much. Laura writes here in London. Now, weak returns, dizzying outflows and poor prospects. That has been the story for hedge funds in recent years. With central bank intervention draining volatility out of markets, active managers have struggled to beat cheaper index trackers. But things maybe are changing. The tide is turning. As a group, hedge funds are off to the best start since 1999. For more, let's get to our hedge fund reporter, Nishant Kumar, who can take us through today's big take story. Nishant, good to speak to you. So what's turning around in the world of hedge funds? Tell us about this turnaround and what's driving it.
Well, it's quite remarkable. So last decade, we can call it as a lost decade for hedge fund industry. We saw some really blue chip names who collected this tens of billions of dollars, powered industry returns. They really struggled because of quantitative easing, because of lack of volatility. And all that changed dramatically last year. Hedge funds all of a sudden started to do really well. And some of these big mega cap names who created all the bad news and headlines on the industry, they turned around. Like any other industry, brands do matter. They do bring confidence to the industry. So we saw the likes of Brevan Howard posting their record year last year, Caxton making more than 40%, Millennium obviously making tons of returns. And all that has combined together to bring this confidence back into the industry. So be it performance, be it flows, be it some new launches, on every parameters, we are seeing a comeback for the industry.
Okay, so we're seeing a comeback after a lost decade then. 2020 marks a real turnaround, and we see hedge funds now out aggressively trying to market, or have been out aggressively trying to market themselves and drawing in plenty of money. So what could go wrong from here?
Well, a lot can go wrong for them, as we saw last decade. Quantitative easing is not great for the industry. They really need volatility to do well. If this COVID infections continue and worsens from here, we might see easier monetary policy for a longer period of time, growth, economic growth stalling, and all that it can hurt hedge fund portfolios. Even if we look at tech stocks, that has been the mainstay, main performance contributors for the industry over the last decade. If something happens to that sector, as we have seen in the recent past, China cracking down its tech leaders, that could contribute to negative performance. And then there are risks like Archegos happening or Reddit phenomenon. Those kind of unforeseen risks can really kill a few hedge funds, and that will be really bad for the industry.
Yeah, so some big macro themes to watch, and also that retail, that slightly more unpredictable maybe, or equally unpredictable retail momentum. Nishant, what about if you're listening to this and you're thinking, I haven't looked at the hedge fund sector for a while, and now you've piqued my interest, Nishant, I want to get exposure. Is the bad news, I suppose, that some of these funds, they've done so well, they've shuttered, they're now shut to new money. What's the story about getting access to some of these big names?
So that's the real problem for the industry, the capacity or how much money a hedge fund can take in. It's not like ETF industry where $1 trillion can flow over the next 1 month and the industry will be able to absorb that amount of money. It's a very slow process for hedge fund industry. And right now, even if you want to take exposure to some of the big winners, they are not taking your money. So the industry needs to create capacity if this trend of investor interest in the industry picks up, which is not there right now. Record number of hedge funds are closed. Who is who of the industry are not taking any money. And just imagine, one statistics really shows the rebound of the industry. So if you look at last decade, industry-wide AUM doubled to $3 trillion. But not a single penny, not a single dollar came via net inflows to the industry. Now we are seeing that tide rising again, investors coming back to the industry. There is also this fear factor among investors that, oh, look, stocks are at record levels, bond yields are so low. So if something happens to the market, they need to be early to switch to a product which can, at least in theory, protect the downside, and that's a hedge fund.
Nishant, thanks very much. Thanks for joining us. Good to get your reporting. Today's big take story then with Nishant Kumar, hedge fund reporter here at Bloomberg. Coming up on the program, oil's steady after its biggest surge in months. Iron ore jumps as investors hope for more infrastructure stimulus in China. We'll dig into all of the latest commodity moves next. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open. 6 or so minutes away from the top of the hour. So we are 50 minutes or so into the European trading session. And this is what we have for you. Noor Al-Ali from Bloomberg Markets Live joins us now. And Noor, I'm looking at these futures. Is it just me or do they look a little less positive than they were? We are still in positive territory. What are the drivers then? What's driving today's session?
Well, I mean, one of my favorite functions at Bloomberg is FTW, and that typically tells you what's driving the global sentiment at the moment. Definitely volatility, growth, momentum are in the leading driver here to this morning. Perhaps we've come off the highs that we've seen in Asian markets, but that's not unusual for European equities to open down and then sort of recuperate throughout later in the day.
And let me ask you about commodities, because that often is something that can certainly make itself felt on the London market, certainly. I'm looking at iron ore prices, up by more than 7% in the Singapore session. We do see some mining stocks in London benefiting from some of that, and we see a continued rebound in oil prices. So what's going on with commodities?
Well, look, let's keep in mind that August is a low volume week. We've got less trading typically because most people are on holidays. And the factors that were weighing on commodities last week, I mean, the Bloomberg Commodities Index last week had its worst week since the beginning of the pandemic in March last year. I mean, so obviously a bit of a rebound is expected. Some people will jump on this as an opportunity, as a buy the dip ahead of greater volumes in coming weeks as well. But we still have the Delta variant definitely wearing in. We also have, growth prospects out of China and the FOMC, because a stronger dollar does not really bode well for commodities in the long term. So we have to probably just wait and see for the next couple of days to see whether or not those gains will give.
Okay, so whether those gains are maintained then in commodity markets. Let me ask you about gains elsewhere and whether they will be maintained then, Noor. And I'm thinking in particular about Chinese stocks, and within that, Chinese technology stocks, because the rebound there has been really strong. And there's a bit of direct read across into Europe, but there's also some sentiment read across.
Yeah, absolutely. I mean, we've been talking about the PBOC and what they're going to say and what their role is really when it comes to equities. Any signs of easing or support from the PBOC will bode well for Asian equities as a whole, in particular tech, because they have been, at the crossfront here when it comes to China crackdown story and what's happening there. So when the PBOC came out yesterday, and we even had earlier headlines with them reinforcing that pledge to help with liquidity and credit. Obviously, they've come in short just of easing the RRR rate as there were market expectations, but that's still very much a good thing for equities for the short term. Now we're going to focus a little bit more on financials and banks there as the crackdown goes there next.
Yeah, rotates from sector to sector then. That's the expectation perhaps. Noor, thank you very much. Thanks for joining us. Noor Al-Ali from our Markets Live team. Thank you very much for joining us on the European Market Open. That is it for this program for the European Market Open. Surveillance Early Edition is up next. They'll take you through this rebound as it is ongoing for global equities. This is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity? No, so the opening up by the UK government was terrific. We saw, in fact, the day that it was announced, we saw our daily new bookings triple. Between JFK and Heathrow, so that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
By Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
The power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Navigating what seems to be a really tough situation better than almost anyone else.
We've worked hard on the supply chain. There's no question there's a lot of work to do in the supply chain for semiconductors. And we're happy that we were able to exceed our second quarter guidance as well as, guide up for the rest of the year.
The question is, are we on track to fulfill our objectives of this operation? To bring out our people, so many of those Afghans who helped us, and so many of those Afghans at risk. And we believe we are.
Our engagement in Southeast Asia and the Indo-Pacific is not against any one country, nor is it designed to make anyone choose between countries.
I think he's articulated what the Fed's policy is in a very clear and consistent way, so I don't see any reason why he wouldn't be reappointed.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 24th of August. I'm Francine Lacqua here in London, and here's what's coming up on today's program. European stocks extend their rebound after the FDA approves the Pfizer-BioNTech shot. Joe Biden urges companies to impose vaccine mandates on staff. U.S. president is set to face calls from allies to extend the evacuation deadline in Afghanistan. G7 leaders meet virtually today. And Chinese tech stocks rebound from near record lows, boosted by a buyback from Tencent and Cathie Wood's backing of JD.com. Now, joining us to talk everything markets, and I mean everything markets, is Eddie van der Velde from our MLive team. Eddie, first, I know you want to talk about gold. I know we have stuff on cryptocurrency to talk about. But actually, it's crazy. 24 hours, you get an FDA approval, like a full approval, and now suddenly everything's on track, and actually the economy is fine, and the markets are up.
Absolutely. There's nothing like price to change sentiment, right? Look, I think there's a lot to be optimistic about out there. I think one of the big things actually is this idea that we're sort of in a reverse Goldilocks at the moment, if you see what I mean. There's just enough doubt about the Delta variant that the economy, that the central bankers will worry a little bit about tightening policy at this point in time. Yet growth is quite quick, and we're seeing this dip buying in China, and I think that's helping sentiment a lot.
Yeah, I mean, technology stocks were definitely up in China. We had a Morgan Stanley note that was quite interesting, actually, with one of the analysts saying, this is the time to buy casino and cruise ships. It's timing everything as we get into the winter months.
I read that note, and it's really interesting that, the talk that this is the moment to really get in on the reopening trade, because I thought that's what we've been doing since last March, right? But I get it. There's a lot of liquidity in the system still. The central banks are a little bit cautious about raising rates too soon, and yet, we're seeing people getting vaccinated around the world, and we're seeing that happening faster, and we're seeing, mortalities are not picking up as quickly as they had in previous rounds of infections. So I think there are reasons to be optimistic underneath all of this.
Eddie, Jackson Hole, dun dun dun, the big one. But are we expecting too much of Jackson Hole?
You know, I think the central bankers will be, like I said, cautious, particularly the fact that they have been forced into doing this virtually, right? That I think that sends a powerful message to central bankers that this is not gone away. There are going to be problems going forward. So Jackson Hole is going to be pivotal one way or another. But I think at this moment in time, the pivot is slightly more towards a cautious central bank.
Okay, I need to ask about cryptocurrency because actually there's an ATM in El Salvador. I mean, suddenly, I know we've been talking about El Salvador quite a lot, but you can actually trade transaction.
Yeah.
Are we going to see that kind of move from other countries?
You know, I mean, the cryptocurrency space is really interesting at the moment because I think, on the one hand, yes, there is this push towards Bitcoin as a currency, but I think there are more important things happening in Ethereum and, you know, other cryptocurrencies. And I think that's really where the interesting developments in the space are happening.
Eddie, thanks so much. Eddie van der Walt there from our MLive team. Now, we're also joined by Francesco Sandrini, Senior Multi-Asset Strategist at Amundi. Francesco, thank you for joining us. A lot of questions, of course, on the markets, a lot of questions, especially on the kind of markets that we've seen over the last 5 to 6 weeks, which is one day you buy on the dip, but the other day there's concern about the economy. The next day, you know, markets forget about the economy. Are you worried about some of these moves, some of the choppiness, maybe in the short term, basically, in the next couple of weeks?
Yes, of course. It's a very misty situation, first of all, because there is a macroeconomic backdrop, first of all, where we tend to see some weakness developing. If we have a look to the consumption patterns in the United States, but also the manufacturing, the Empire Index that has been released, we see that we have already been peaking in terms of macroeconomic activity, and this is the direction we are going in Europe as well, despite of the good numbers in terms of PMI we saw yesterday. So there is a macroeconomic situation which is slowing down. Then, of course, there is the entire discussion on Jackson Hole. You discussed that before, and this is going to be perhaps an event that is less important than originally thought. And then, last but not least, what comes out of China. We have two situations developing in Asia. China, per se, is quite an idiosyncratic situation with a wave of regulation developing and mounting. And this is the so-called Common Prosperity Program that has still to be digested and understood by Western investors. The second one is in Southern Asia with COVID.
So, Francesco, overall, are you expecting equities to actually continue rising? So this is, you know, what we are trying to figure out. And if you look at the difference between people who believe that the S&P 500 falls and the ones that think that it actually rises, that gap hasn't been wider in a decade. So what's your take on it? Are we going to see momentum continue into these markets, or is it really time for a healthy correction?
It's time for an healthy correction, we believe, because of the reasons that I was outlining. Will not be a very deep correction because the fundamentals are still quite resilient. But that's the time where we need to have some edges in place because of the misty situation I was describing in terms of macro and in terms of regulation coming.
So what kind of correction are you expecting? And does it actually impact most asset classes?
We are expecting a correction on the equity markets between 5 and 7%, primarily because of the fact that margins are historically very high. We are coming out from an earnings season in Q2, which has been extremely positive. A lot of companies have been raising their prices to respond to increasing pressures on the cost. So the situation is a situation with valuations that are quite stretched. We deem this approach, this environment, very fragile. And in this fragile environment, monetary conditions, macroeconomic slowdown affecting growth, and slowing down in key regions like China, including the COVID situation in Southern Asia, can be a problem for this kind of growth model.
So, Francesco, do you believe that actually treasuries at the moment are probably the safest assets because they're priced correctly?
Yeah, we don't think that the treasuries in this phase will increase their yields meaningfully. They will trade on a range for quite a foreseeable future between the 120 and 130. And then, of course, little by little, they will increase. But it can easily be the case that credit is a nice place to be at the moment, at least awaiting a change of inflation regime that at the moment is difficult to foresee. So, yes, we need to keep the portfolios extremely balanced in this phase, keeping committed to risky assets, but with hedges in place, because whilst at the same time the macroeconomic conditions are still resilient, there are issues that could hamper and have a negative effect on very high valuations that have been developing during the summer.
Francesco, thanks so much. Francesco Sandrini from Amundi stays with us, and we'll talk a lot more about some of these lofty valuations that Francesco was just alluding to. Now, you can catch all of our special coverage of the Jackson Hole meeting right here on Bloomberg TV. That's on Friday at 3 p.m. UK time. Coming up, oil's steady after its biggest surge in months. Iron ore jumps as investors hope for more infrastructure stimulus in China. We'll dig into all of the latest commodity moves next. This is Bloomberg.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it, because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Francine. UK Defence Secretary Ben Wallace has acknowledged it's unlikely the US will extend an August 31st deadline for leaving Afghanistan. The evacuation from Kabul is set to dominate a virtual G7 summit convened by Prime Minister Boris Johnson later today. The Taliban has warned the August 31st date is a red line and that it will take action if soldiers aren't gone by then. Now, the US Vice President says Beijing poses a threat to countries in Asia and is using coercion and intimidation in its territorial claims in the South China Sea. Speaking in Singapore, Kamala Harris laid out America's vision for a region built on human rights, freedom of the seas, and unimpeded commerce.
Our engagement in Southeast Asia and the Indo-Pacific is not against any one country, nor is it designed to make anyone choose between countries. Instead, our engagement is about advancing an optimistic vision that we have for our participation and partnership in this region.
And campaigners have singled out big accounting firms for failing to highlight green issues as protesters gather in central London. Hundreds of Extinction Rebellion supporters assembled in Trafalgar Square on Monday as they started 2 weeks of protests over climate change. The group says accountants are complicit in greenwashing. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, commodities are in focus again today as expectations of a recovery in economic growth are buoying assets. Iron ore futures in Singapore have surged as much as 8.7% following the approval of the Pfizer-BioNTech vaccine in the U.S. After jumping more than 5% yesterday, snapping its worst losing streak since October 2019, oil holding on to gains this morning. Bloomberg Intelligence, though, says this optimism could be short-lived, at least for oil. Our analysts say that Fed taper talk could see oil slump back below $50 in the next 2 months. Well, we're back with Francesco Sandrini from Amundi. Francesco, if you look at some of the benchmark and some of the assets, it's very clear that commodity-rich currencies and commodity-rich industries have also swung around quite a lot. I mean, what's your take on commodities overall?
That there are no these situations to see a commodity super cycle developing for a lot of reasons related to the leverage cycle as well. So we think that commodities are approaching a level which is their equilibrium level. So it's difficult to see this continuing. Because of this reason, we see that all the sectors that are related to commodities, like the cyclical sector, some of the value sectors, I'm referring to materials, I'm referring to energy, are perhaps still a little cheap, but not very far from their fair value. So that's exactly also what the market seems to discount. The market pays a lot of attention to a lot of quality sectors, trying at the same time not to be too committed to all those value sectors related to commodities that seems to be to some extent arrived to the level in this business cycle. So we do not think that there is still a big upside.
Yeah, so there's not a big upside in your... I mean, we're talking about some of the lofty valuations as well, Francesco. I don't know how much you look at China. I know we talked about it a little bit, but how much do you look at some of the exposure of stocks to China right now?
Yeah, China at the moment is a big question mark for everyone because there is a huge wave of regulation coming. We have already seen 32 regulation act only in the last 12 months in a lot of sectors, starting for technology. So talking about valuation in this environment in China is extremely difficult. Said that, having this transition in motion, from an historical point of view, China and the world conglomerate of the emerging markets look cheap. But it's a cheapness, in our opinion, that is still a little problematic to create a catalyst to enter into emerging markets because it's a little like catching a falling knife. So we need to have more visibility on how the regulation will affect the profitability of companies, especially in China. And this is an important driver. So because of this reason, we try to be quite cautious in emerging market despite of valuation. Of course, in emerging markets, every metric is better than the one that we are seeing in the developed markets, where from every point of view, price earnings, price to book value, price to sales, companies are getting a little expensive with very high margins historically.
Francesca, is there anything actually in the emerging markets that you would look at right now, though?
I think that is very important to try to be on board on some of the themes that will shape the future in China. So we need little by little to consider to enter in sectors that will benefit from this huge wave of reforms undergoing. Consumers, healthcare, those are typically the sectors that are catching our attention in this phase, right, because we are in the middle of a big transition that will try to reduce the profits of large corporations in order to improve this common prosperity program that Xi Jinping seems to be quite keen to discuss during his program. These are the sectors we are looking at.
Francesco, what do you do with gold right now? I don't know whether you look at gold or cryptocurrency. I know it's a loaded question.
No, we cannot look at cryptocurrency as a company. We made these decisions. So we are looking a lot about gold. Gold is an asset class that normally benefits from real interest rates going down. So this is a good situation, and this is the reason why you are seeing some rebounds in the gold valuation approaching the 1800. Gold will benefit a lot from what will be discussed in Jackson Hole, especially on Friday with the testimony of Jay Powell. And until when interest rates will continue to stay extremely low and real rates in a negative territory below 1%, gold will be a good asset class to be invested. I think that after the cyclical rally we saw in November last year, this is a good environment to stay exposed in gold as an hedge also.
Francesco, thank you so much. As always, Francesco Sandrini, their senior multi-asset strategist at Amundi, joining us this morning. Now, coming up, Chinese tech stocks rebound on buying from Cathie Wood and Tencent. We'll look at that story next. This is Bloomberg.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Chinese technology stocks rallied for a second day as sentiment was boosted by Tencent's buyback and as Cathie Wood also bought back into JD.com after a strong set of results. Beijing's crackdown on tech firms, though, persists as the ride-hailing giant Didi shelves its European expansion plans amid ongoing drama with authorities. Well, Bloomberg's Tom McKenzie joins us now, the expert on China. Tom, first of all, good morning, and it's so nice to have you in the studio. I mean, what's crazy with some of these Chinese technology stocks is that they're down. Oh, no, today they're up. And this kind of has to do also with some of the support maybe from PBOC?
Possibly, yeah, and not just up a little bit, a lot, right? I mean, the likes of JD.com up more than 15% the last time I looked. Of course, the session in Hong Kong has just closed out, but you're seeing gains, double-digit gains for the likes of Tencent, Meituan, JD, as I say, Alibaba posting some strong gains in the session today as well. So part of it, you did have the PBOC coming out and saying we are going to support and ensure there's enough credit in the system after that drop-off in July, particularly focused on SMEs and the real economy. That was the quote from the PBOC Governor Yi Gung. This seems to be more about valuation. So the Hang Seng Tech Index is down close to 40% year to date. The RSI was suggesting that it is oversold. So you had a dip buying, very aggressive dip buying, it seems, over the last 2 days. That index now is close to 9% gains just over the last 2 days. And it's the lack of new initiatives on the regulatory front. It hasn't gone away, but we haven't had new initiatives spelled out.
So who's dip buying? Like I keep on reading, Cathy Wood, the great believer in Chinese tech, in Tesla and cryptocurrency, has basically been buying some of these stocks up.
Yeah, and this was just a few weeks after she essentially said she was zero on exposure to Chinese equities. But this is the debate that's been going on. You've been having this with your guests, I know, it's to whether or not China is investable or not. And it's still mixed in terms of what we're hearing. But clearly there are enough investors on the sidelines with cash ready to get in at the right price. And that's what we've been seeing over the last few days. And particularly when it comes to some of these blue chips, as Alice has been telling us, where the fundamentals longer term, if you're prepared to hold for 6 months plus, according to one of the people quoted in BN story today, then you're looking good because the fundamentals for these companies, despite that regulatory pressure, remains for the long term at least solid.
Okay, Didi. So I'm imagining that actually Uber drivers across all of Europe are saying, okay, they're not coming into Europe right now, and this is because of concerns over what they do with their data.
Yes, so they, of course, have faced scrutiny in Beijing over how they handle the data there. Now there's a concern about the scrutiny they might face in other jurisdictions, in Europe, UK, Germany, France. Those are all countries that they had planned to expand into this year. The Daily Telegraph reporting they're going to shelve those plans for at least a year. Our own reporting suggesting that some of the headcount that they've been adding in places like London, but also Germany and France, that's going to be scaled back. Part of that, again, is scrutiny from lawmakers in the UK, those other jurisdictions. That's a concern. Uber has a more than 10% stake in DD, but also going toe-to-toe in Europe would have been a challenge for that company, certainly. So some relief, as you say, for Uber in Europe, at least.
Now, underpinning all of this, and I really want to ask you about, regulation. We kind of sometimes forget, there was the National People's Congress last week, and they kept on reminding us that this is about a healthier and also more equitable society, so crackdown could continue.
Absolutely, and what we're looking for is how that crackdown is implemented. So fleshing out the framework in terms of that regulatory push in areas from healthcare to real estate to technology to education. We have the framework, we saw that with the 5-year plan. What we're looking for are the details as to how the changes in rules affect those individual sectors and how they are applied as well, because it's implementation that's also always key.
Tom, thank you so much. Tom McKenzie, they're experts on China. Now, later on, we'll also be speaking to ARK Invest Chief Executive Cathy Wood on the company's outlook, including its recent buyback of JD.com shares. That's at 4 p.m. New York time, 9 p.m. in London. Don't miss that interview. Coming up, we talk about the G7, we talk Afghanistan, and of course, Kabul airport. This is Bloomberg.
Neptune was discovered, everyone wanted to do it because it was this clear demonstration that you can use math to discover objects.
Unfortunately, since then, no major planet in our solar system has been found. But thanks to modern telescopes, thousands of smaller objects have been discovered in the past few decades beyond Neptune, called trans-Neptunian objects, or TNOs. And planetary scientists at the California Institute of Technology have noticed some anomalies with these objects. Their hypothesis? A giant theoretical planet beyond Neptune, Planet 9. And thanks to a new telescope, equipped with the largest digital camera ever built, we may be one sky survey away from finally finding it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
European stocks extend their rebound after the FDA approves the Pfizer-BioNTech shot. Joe Biden urges companies to impose vaccine mandates on staff. The U.S. president is also set to face calls from allies to extend the evacuation deadline in Afghanistan. G7 leaders meet virtually today. And Chinese tech stocks rebound from near record lows, boosted by a buyback from Tencent and Cathie Wood's backing of JD.com. Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 24th of August. So Joe Biden is set to face another grilling over his withdrawal from Afghanistan today. The president's closest allies, including the UK's Boris Johnson, are set to ask for an extension to the window for evacuating civilians from Kabul airport at the G7 meeting. Now, this even as the U.S. says it's on track to get all Americans out of the country by August 31st. The Taliban have warned of consequences if there is a delay. Here's U.S. National Security Advisor Jake Sullivan.
The question is, are we on track to fulfill our objectives of this operation, to bring out our people, so many of those Afghans who helped us, and so many of those Afghans at risk? And we believe we are.
But for some, it is the manner of the withdrawal that is the greatest cause of concern. Leslie Vinger-Marie, head of the U.S. and America's program at Chatham House, says that America's decisions has set the stage for a crisis of confidence amongst its closest partners. Well, we're joined by Leslie Vinger-Marie. Now we're also joined by our opinion columnist, Bobby Ghosh, who today has been writing about Joe Biden's belief that the Taliban is suffering from an existential crisis. So thank you both for joining us. Leslie, if we start with you, who is having the most existential crisis? I mean, is this one of the trickiest situations for Joe Biden, maybe more than the withdrawal, the way in the way, you know, it has been done? We see pictures every day harrowing from Afghanistan and Kabul airport.
Well, Francine, as we all know, this situation is by far the worst for those people in Afghanistan, and especially those people who have no hope of leaving and won't be favored by the Taliban. So I think that is, as we all know, the first and most important priority is that humanitarian situation. Obviously, Joe Biden has felt very strongly about pulling the United States out of Afghanistan. This goes back to around 2009, possibly earlier. So for him, it's painful to see it unfold in this way. His decision has been deeply challenged by the UK, by NATO, by Europe, by many in the US. But again, many Americans have wanted to get out of, the so-called forever wars for a very long time. Nonetheless, dealing with this level of crisis at the same time, bear in mind that COVID is spreading across the United States at higher rates than we've seen for several months. And there are question marks about his domestic agenda. So this is not a nice time for the president, but he is seeing through something that's absolutely critical to his foreign policy agenda.
Bobby, U.S. President Joe Biden basically says that, the Taliban are going through an existential crisis. You very well thought, in a very well thought out article, you explained also that, the Taliban have to govern a country which is much bigger, which is much younger than 20 years ago. It doesn't seem they have an existential crisis because the funding keeps on coming.
Well, yes, they're not well known for self-analysis and self-doubt, the Taliban. They are a very good fighting force. They're capable of raising funds to keep an insurgency going. It seems like the President Biden, needs the Taliban to have changed. So what he's saying when he says that he thinks that they're going through an existential crisis, when he says that he thinks they want to be part of the international community, they want to be part of the global economy, he needs that to be true because he's made a huge gamble in Afghanistan that depends on the Taliban having changed, that depends on the Taliban behaving in a responsible, recognizable fashion. But the Taliban are not signaling the same things. Never mind what their spokesmen say in press conferences. In parts of the country that they have been running for now several years, they've not been behaving in any new way. They've not been showing anything to suggest that they're interested in change.
Leslie, this also points to, I guess, massive intelligence failures, right? It's unfathomable to think that just 2 weeks ago we were talking about Kabul falling within, 3 to 4 to 6 weeks, and actually took 3 days for the Taliban to come over. How does America today understand Taliban and Afghanistan?
Well, on the question of intelligence, there are certainly reports coming out that there were cables from the State Department expressing the urgency and the rapid strength of the Taliban, that the CIA had issued warnings. Nobody knew how quickly this would happen, but there were certainly plenty parts of the U.S. government, of the intelligence agencies that had expressed this concern. But intelligence is a tricky business. Ultimately, this was a policy decision. It was a decision taken by the president. But we are going to be hearing the analysis of this for a very long time. I think, Francine, that one of the things that will be critical now is people will evaluate President Biden. They will look to Afghanistan in the course of these next few days and next few weeks, certainly the days approaching the August 31st deadline. Then how this is handled over the next couple of weeks is absolutely critical. But then remember, and this is, getting to the G7, those broader questions about how to manage, stabilize, invest from a humanitarian perspective in Afghanistan, prevent a terrorist threat reemerging. These are all very difficult, very challenging, very important questions that are going to be difficult to manage when there's no international presence within the country.
And Bobby, we also hear of door-to-door manhunts, right, happening in certain parts of Afghanistan. Are the Taliban united?
Well, yes, they're united. That doesn't mean that they are a monolith. There are different factions within the Taliban. As is often the case with insurgencies, there are parts of the group that are more extreme than the other parts. But to the point that Leslie was making just now, these questions that the Western world has to ask themselves, these are questions that should have been asked and discussed by the people who will be meeting in the G7 meeting today. They should have been discussing these things before Biden made the announcement. And that's the big frustration for America's allies in the G7, that they were not properly consulted, that Biden did a Trump, essentially, and pulled the rug from under their feet. And they're now struggling, they're scrambling to try and deal with the consequences of it.
But Leslie, do you think that they weren't consulted, or it was just a massive failure of analyzing the situation on the ground?
It's clearly very complicated. Anybody who was listening to President Biden throughout, frankly, his time as vice president on through the campaign trail, through his inauguration, knew that it was a question of when rather than whether, a question of how. Obviously, it's a decision that was seen to be and seems to have been unilateral in the moment that it was made. Consultation wasn't what it should have been. And I think the G7 is going to be working very hard today to demonstrate to the world that they are aligned at a time when clearly there's a lot of fracturing, but the need to come together on these big questions of will there be sanctions? How will the question of recognition be dealt with? How will the grave problem of immigration, of refugees, of investment in those processes? All of these are critical. It's a time to pull together, but very difficult When the United Kingdom, we saw that fierce debate in Parliament, and so many others feel like they weren't consulted. But this is a president who feels passionately that America has overspent, it has overinvested, it has taken a toll on boys and girls, men and women, American citizens and others who really shouldn't be there when there's a mission that hasn't been focused and hasn't, frankly, had the chance of succeeding beyond that very narrow and very immediate goal, which emerged right after 9/11, which was getting rid of al-Qaeda, the threat to the U.S. homeland, and to really manage that terrorist threat. The president feels like that goal was achieved, frankly, quite a long time ago, and that the U.S. simply shouldn't be in.
Will radicalize other countries?
Well, it'll certainly send a signal to radical groups and insurgencies around the world. They will feel heartened by what they regard as the Taliban's success. We're already seeing congratulatory messages to the Taliban pouring in from other Islamist groups around the world. And it'll make America's allies around the world wonder whether the United States has their back.
All right, thank you both for joining us, Bobby and Leslie there. Leslie Vinter-Murray, head of the U.S. and America's program at Chatham House, on our Bloomberg opinion columnist, Bobby Ghosh, joining us this morning. Now, coming up, Kamala Harris kicks off her trip around Southeast Asia by warning countries about the influence of China. We'll talk more with Leslie Vinter-Murray about America's role in the region. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here.
Hi, Francine. The boss of the world's biggest index provider has shaken off concerns about the investability of Chinese stocks following Beijing's recent crackdown. In an exclusive interview, MSCI Chief Executive Henry Fernandez told Bloomberg TV that China's markets have quickly rebounded in the past.
To see how it all shakes out, but I think it's important to keep in mind that countries go through periods like this. There's no country that is exempt about this, including Western countries.
And Richard Branson's Virgin Orbit is going public in a SPAC deal that values the satellite launching company at $3.2 billion. The merger with NextGen Acquisition is expected to provide the new company with $480 million in cash, bolstering its capital until regular launch operations are expected in 2023. Boeing is among investors putting $100 million into the company. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, Vice President Kamala Harris has warned that China poses a threat to countries in Asia, whilst reassuring nations in the region that the U.S. won't force them to choose between the world's biggest economies. She made the comments in Singapore during the first leg of her trip to Southeast Asia, where she reiterated Washington's commitment to the international rules-based order.
In this region, we have long put forward a vision of peace and stability, freedom on the seas, unimpeded commerce, advancing human rights, a commitment to the international rules-based order. Now, as we face threats to that order, I am here to reaffirm our commitment to that vision.
Well, still with us is Leslie Vinjamuri, head of the U.S. and America's program at Chatham House. Leslie, if you look at the U.S.-China relationship, I mean, it seems a lot more complicated than at face value.
Absolutely. And, what's very interesting about the vice president's trip is it's, signaling on many dimensions that despite, to our earlier conversation, the crisis in Afghanistan, that the United States is going to remain very focused on that strategic relationship, on the so-called China challenge. And, Kamala was saying very clearly that China is a threat in the South China Seas to the rules-based order. But she was also then subsequently signaling that positive agenda of cooperation. You don't have to choose if you're a neighboring country in Asia between the United States and China, which of course is what they all fear for very good reason. And also setting forth a series of measures on which the United States and Singapore will begin to cooperate and drive forward a positive agenda in which the United States has an influence over the region. I think people have been waiting to see whether the United States will have a more developed strategy, not only towards China, but importantly, across the region on the economic front. Part of the measures that have been announced are about climate, which of course is right at the top of the agenda for cooperation globally, but especially in Asia. One of the US semiconductor firms announced on the back of the vice president's speech that they would be increasing their investment in Singapore and semiconductors. So all of these measures, again, very important signaling, given the timing, that the United States will take those challenges very important and move forward on that agenda.
All right, Leslie, so on timing, because we don't have a trade war, or at least not as explicit as under Trump, is that why we're seeing this regulation from China? Do they feel emboldened by this administration?
I think that China understands the stakes are very high, that this is an administration that, as you indicate, is moving far beyond, intends to move more comprehensively towards thinking about the threat that China poses economically across a number of dimensions. It's a much more serious game. There's a pause right now because of Afghanistan. I think there's a question mark about whether the United States will lose its way, lose its strategic focus, and whether the U.S. and its European partners will disintegrate in terms of their ability to cooperate with respect to China. So China's watching this carefully. They're watching the G7. Of course, they're very deeply concerned about what will be coming out of the United States. And this is the sort of first signal of that.
Leslie, on the domestic front in the U.S., Nancy Pelosi is also trying to resolve this showdown, this very important showdown that we've seen, for example, in the House on the economic plan of Joe Biden. So she's trying to resolve the showdown between a group of moderates on, the economic agenda. If she fails to do so, it could put the $3.5 trillion budget blueprint at risk. Some more moderate Democrats, while backing the $550 billion infrastructure bill, are also nervous about the price tag of the full budget. So can Nancy Pelosi keep it together?
Well, this is really a challenging moment for her. It is exactly what we expected to see at one level, trying to balance the progressives in her party, the moderates, and to deliver. She's very committed to delivering on Biden's economic agenda. Of course, it seems unlikely that she'll get that full budget through. The question, I think, is not so much whether it gets through or not, but in what form, at what level, what measures are taken off, what do those negotiations look like. But the sequencing here is really the interesting question. And the fact that so far Nancy Pelosi seems to be making the decision to put forward the budget first and infrastructure second, of course, not something that's making the moderates happy at all. They like to see that infrastructure, which has bipartisan support, delivered quickly in timely fashion so that they can benefit. It's desired by the American people, but it's also politically popular. But I think that Nancy Pelosi doesn't want to give that until she's gotten that broader agenda through. So it's going to be a very tough negotiation. She's certainly got a lot of history and a lot of experience doing this kind of work, but it comes at a very difficult moment where a number of people are worried about inflation, they're worried about spending, and now they're in, again, is this distraction of Afghanistan, distraction from the perspective of the U.S. that's raising questions about Biden's ability to govern.
Leslie, thank you so much. Leslie Vinjamuri, the head of the U.S. and America's program at Chatham House, joining us this morning. Now, coming up, hedge funds are hot again. The industry is off to the best start since 1999. Investors risk missing out, though. More on today's big take story next. This is Bloomberg.
The skill set that a CEO really needs to be successful in today's environment?
So I think a good leader needs fundamentally good character and, frankly, perseverance. You just have to never stop.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, weak returns, dizzying outflows, and poor prospects. That's been the story for hedge funds in recent years. With central bank intervention draining volatility out of markets, active managers have actually struggled to beat cheaper index trackers. But the tide is also turning as a group of hedge funds are off to their best start since 1999. Now, for more on all of this, let's get straight to our hedge fund reporter, Nishant Kumar. Nishant, first of all, congratulations on a wonderful big take. I know it's out today, and I urge everyone to read it on our website or on our Bloomberg terminal. So what's behind the hedge fund comeback?
It really has to be performance, and performance in a tough market like last year. One of the key factors that led the decline in the hedge fund industry is some of its big blue chip names were struggling for much of the last decade. That all changed in a big way last year. So you had likes of Brevin Howard, Caxton, Millennium, of course, Citadel, all the blue chip names doing really, really well when the market conditions were challenging. And that kind of has infused new confidence in the industry. And with stocks at record levels, bond yields are so low, maybe investors are thinking that to protect the downside, maybe they can go to hedge funds. And that's why inflows are also returning to the industry.
Yeah, so how big, Nishant, of a turnaround are we actually talking about?
There are different ways to look at it, but I think one of the most important yardstick is to look at how many funds are basically close to investments. So that number has hit a record level. Who is who of the industry, the blue chip names, most of them are closed. That kind of shows that the industry is reaching its capacity. So there is no longer billions of dollars that these funds can manage. So that's one very important factor. Another one is that if you really look at last decade, AUM of the industry doubled to $3 trillion. But not a single dollar came through net inflows. Now that is changing. Tens of billions of dollars is flowing into the industry, especially to the larger players. And AUM has crossed $4 trillion. And that's a very significant milestone for the industry. But the factor that enthused most of the investors the most is the fertile trading hunting ground for traders. So there is that inflation risk, there is volatility coming back. And all that is creating very good environment for hedge funds to maintain their track record and make money.
Nishant, why are hedge funds actually trying to close off actually to new money?
Well, unlike ETF industry, which can quickly raise $1 trillion and deploy in a month, say, capacity is really a problem for hedge funds. There is so much alpha available in the market. So it's a very wise move for hedge funds to close funds at a level which they are comfortable at. One of the problems why industry suffered the most last decade is because too many funds raised too much money very quickly, and they could not take advantage of swift market moves. So that's why it's very important that this time around hedge funds are being cautious and closing at the right level so that they can take advantage of these big moves.
Nishant, thank you so much. Bloomberg's hedge fund reporter there, Nishant Kumar, with our big take. Now you can catch all also of our special coverage of the Jackson Hole meeting right here all week. Coming up, more Bloomberg Surveillance Early Edition. Matt Miller and Kaylee Lyons join me. This is Bloomberg.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television. A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
We fundamentally disagree with the thesis that China is now uninvestable. And that is not what we're speaking to our clients about or hearing from our institutional clients.
There's been a lot of criticism of China in terms of lack of compliance, of lack of regulatory oversight. So they're now exerting their regulatory oversight. So we criticize them on the other side as well.
When others have worried about things the Chinese are doing the past 30 years, they've always been wrong. The Chinese seemingly get it right. But this is a more tricky time for them to do these things than, in my view, than it's been in any of the past. Certainly 20 years of BRICS and probably earlier.
This is Bloomberg Surveillance, early edition with Francine Lacqua, Matt Miller, and Kaylee Lyons.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Tuesday, August 24th. Our top stories today. It's a risk-on mood in global markets. Chinese tech stocks bounce back thanks to a couple of prominent buyers. Waiting to see if the economy will really reopen, well, one Morgan Stanley money manager says by now, before it's too late. And Joe Biden's foreign policy fronts, while his vice president blasts China, while allies want him to delay a U.S. troops withdrawal from Afghanistan. Well, good morning, everyone. Francine Lacqua here in London. Kaylee, of course, in New York, and our Matt Miller in Berlin. Kaylee, if you look at the market, so we're seeing a nice bounce back after, I think, the worst week in about 6 months last week. And they seem to be focusing now on the fact that actually, even if we have COVID-19, we're not going to see a derailing of the economy. And, of course, Chinese tech stocks on a tear.
Yeah, absolutely, Francine. The rebound in Asia continuing for a second day. Actually, the best 2 days for the MSCI Asia Pacific Index since all the way back in February. It was really green across the screen. We were up 0.9% in Japan, 1.6% in South Korea, higher by about 1% in China, and then Hong Kong, really the outperformer, up about 2.5%. On the one hand, you have the PBOC pledging support for credit, and on the other, you do have the bounce led by Chinese technology companies. The Hang Seng Tech Index actually up 7% today. One of the big outperformers within that was JD.com, which of course reported results yesterday pretty strong, even in the face of regulatory scrutiny from Beijing. That stock popped 15%, I should say, in the Asian session. In other asset classes, I did want to point to the Thai baht. That is your big outperformer in Asian FX amid speculation now that COVID is indeed peaking in Thailand. It's stronger against the US dollar by about 0.75%. And then in the commodity complex, a big bounce for iron ore futures, up 8.7% in Singapore, because that PBOC policy support is lending to the idea that economic growth will indeed be better. As for what the picture looks like here in the US, we closed just shy of a record high yesterday, and once again, futures are in positive territory this morning. We're up about 0.2% on S&P E-minis. Some selling in the bond market, yields ticking up a basis point on the 10-year to 126. The dollar was weaker earlier, now slightly stronger, but that isn't dragging on crude. WTI, of course, rallied 5% yesterday. It's up another 0.7% this morning to $66.12 a barrel, Matt.
All right, I'll be looking at crude as well from the Brent standpoint. But first off, take a look at what's going on in markets with this map. If you want it on your Bloomberg, there's a really efficient way to get it. Just type WMGO. And you can see we've got a little bit of a loss here in Spain and Portugal, the Iberian Peninsula, at least not doing well today. France also down a little bit. Italy not making a lot of forward movement. We are seeing gains in Germany, and that's enough to hold the stock 600 higher right now by about 0.1%. The euro is down at 117.28. You were just hearing from Kaylee about the gains in the dollar. Gold is off a little bit, but still holding over $1,800 a troy ounce. So gold at 18.01 right now. And then Brent crude, which is really the global benchmark, getting back closer to $70 a barrel at 69.36. The interesting thing, I think, Francine, I know we're going to talk about Andrew Slimmons' comments from Morgan Stanley about buy the reopening trade before it's too late. The leaders here in Europe in terms of groups are travel and leisure, or as you would say there in Great Britain, travel and leisure, as well as automakers and auto parts. So it looks like the market really is taking Slimmons' advice when it comes to buying, either they're buying the reopening trade or they're buying the dip and tending towards those stocks.
Yeah, I quite like it. They're kind of like, you know, risk-on mood, let's go, and even buying cruise ships. So we'll get back onto some of the trades, Matt. This is what else we're watching today. So it is August, but actually we're quite busy. Kamala Harris arrives in Vietnam, becoming the first U.S. vice president to visit since the war ended in 1975. The Paralympic Games also begin with the opening ceremony in Tokyo. It's Kathy Hochul's first day as New York governor after replacing Andrew Cuomo. We'll get U.S. new home sales data at 10 a.m. New York time, and then a little bit later, of course, we also have that key G7 meeting to discuss Afghanistan. Now, onto our market story, and Chinese tech shares rallying for a second day. Sentiment was boosted by Tencent's stock buyback as Cathie Wood bought back into JD.com after a pretty strong set of results. So let's get more on this with our China expert, Tom McKenzie. Tom, great to have you. I mean, if you look at some of these share prices, they're up 5-6%. Is it only dip buying, or is it something more fundamental?
So it's valuation, certainly. So we look at the Hang Seng Tech Index, which is up just over the last 2 days, 9%. Kaylee made a nod to that, of course. In terms of valuations, it's looking attractive. The RSI is suggesting that that index is heavily oversold. It's down about 40% year to date. So that is one catalyst, certainly. And we've seen that, in fact, mainland buyers have been buying up through the Stock Connect in Hong Kong. So the fact that the mainland buyers are enticed by this prospect as well is interesting. But you did say there's other catalysts as well that we should touch on. Tencent with that share buyback, 230,000 shares. By the way, Bloomberg Intelligence suggesting that that could go on until October, which will provide further support for Tencent as well. And then Cathie Wood dipping her toe back into JD.com after those solid earnings.
Yeah, of course, she's buying into those ADRs, and we're seeing a broad rebound in ADRs in pre-market trading here in the U.S., and that includes Didi, even though reportedly it's putting its expansion plans in Europe on hold. What can you tell us about that?
That's right. So Didi had plans to expand into France, the UK and Germany. Those have been put on hold now over concerns about regulators, lawmakers in Europe, predominantly UK, in fact, where lawmakers have said they wanted to scrutinise Didi's expansion here. They are concerned that there's going to be further oversight of their collection of data of customers in this market. The Daily Telegraph saying that they're going to put this on hold until for at least 1 year. There may be some headcount trimming as well in those markets, France, Germany and the UK. But of course, this is a company that's facing that regulatory squeeze back home as well. Data is front and centre for Chinese regulators still trying to get their hands around how secure Didi's data set as well. So for the moment for Didi, that expansion plan has been curtailed. Probably some upside for Uber, which would be facing that competition from that Chinese car-hailing service here.
All right, T-Mac, thanks very much for that. Tom McKenzie filling us in on the latest out of China. Now, Vice President Kamala Harris warned that China poses a threat to countries in Asia, but she reassured nations in the region the U.S. won't force countries to choose between the world's biggest economies.
Our engagement in Southeast Asia and the Indo-Pacific is not against any one country, nor is it designed to make anyone choose between countries. Instead, our engagement is about advancing an optimistic vision that we have for our participation and partnership in this region.
Joining us now is Bloomberg's Bruce Einhorn from Hong Kong. So, Bruce, do people just take her word for it? I mean, when you look at U.S. actions, our credibility isn't currently that strong, is it?
Well, I think the point that they're trying to make is that there's, the U.S. is focusing on this part of the world. We have seen that Defense Secretary Lloyd Austin was in Philippines a month ago, extended an agreement regarding military forces in the Philippines, something that President Duterte had threatened to end. Tony Blinken's been doing a lot of talking with Southeast Asian leaders. So this is part of a broader effort on the part of the administration to show that the Biden administration is focused on Southeast Asia.
Bruce, how much does China actually think that it'll get a free pass because of what's happening elsewhere in the world? It feels like they're much more aggressive in terms of going after the U.S., going after regulation since President Trump left.
I think there was an expectation among many people that President Biden would take a softer line toward China as opposed to his predecessor. That hasn't happened. In fact, President Biden seems to have really ramped things up. And in Vice President Harris's speech today, she did make a point of talking about the threat that Beijing poses to the region, thanks in large part to its actions in the South China Sea. So I think that what we're seeing from the Vice President now in Southeast Asia is part of this effort to sort of rally countries as part of a broader effort to address what the Biden administration thinks of as the China threat.
Thank you so much for joining us, Bruce Einhorn, there in Hong Kong. Now, UK's Defence Secretary Ben Wallace has also acknowledged it's unlikely that the US will extend an August 31st deadline for leaving Afghanistan. This comes as the situation on the ground grows more dangerous. Jake Sullivan, US National Security Advisor, said in a briefing that the US is on track with its evacuation efforts.
The question is, are we on track to fulfill our objectives of this operation? To bring out our people, so many of those Afghans who helped us, and so many of those Afghans at risk. And we believe we are.
Joe Matthew, Bloomberg Washington correspondent, now joins us from our D.C. bureau. Joe, how likely is it that actually this gets extended, given the Taliban have said, no way you're sticking to that August 31st, or it will get ugly?
Some would suggest that it's a lot less likely this morning as we hear from the defense minister in the UK, as we hear as well from the chair of the Intelligence Committee in the House, Adam Schiff. But look, this is a minute-by-minute, hour-by-hour situation here in Afghanistan. That's 1 week from today. Are they going to be able to get that many people out? Because obviously this is an administration that has promised to get every American who wants to get out of the country out of the country. Some think that can be done in the next week. But what about the Afghan allies who are still in the country? That remains a big question. Jake Sullivan yesterday, if you listen to his words, started to change a little bit the way he was referring to that, making clear to reporters in the briefing room that the United States will go back, even after the military leaves, to continue evacuating our Afghan allies.
That's the situation evolving abroad, Joe. As for the situation evolving on Capitol Hill, Nancy Pelosi is trying her best to wrangle her caucus. The moderates giving her some pushback. What is her next move on Biden's economic agenda?
We're going to find out, I guess, about noontime today. This is not the first time that things went into the wee hours. Lawmakers were arguing about this, Democratic lawmakers, to be clear, arguing about the process and whether they should vote on reconciliation, the big $3.5 trillion deal, or the bipartisan infrastructure deal that is already passed. They're deadlocked here. It's not clear that Nancy Pelosi has the votes. They did not take a procedural vote that was first scheduled for last night. They're going to come back together at noon today to start again. But keep in mind, lawmakers are supposed to go home tonight, so this could be a pivotal day in the effort to get infrastructure in the U.S.
I'm sure the lawmakers are eager to get back to their summer recess. Thank you so much to Bloomberg's Joe Matthew in Washington. And of course, you can listen to Joe every weekday on his radio program, Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. A big one to the upside is Palo Alto Networks, of course, the cybersecurity company. It reported after the bell last night, gave a revenue forecast that topped expectations. Analysts really said it was strong across the board, and as a result, that stock up 11% in early hours. And it's giving a lift to other cyber-related stocks as well, one of them being CrowdStrike, although CrowdStrike is getting an added boost because we got news overnight that it is going to replace Maxim integrated in the NASDAQ 100 index. That change will be effective as of Thursday, August 26th. That stock up about 5.3% in anticipation of that. And I was mentioning, as Tom McKenzie was mentioning, the boost we saw in Chinese technology shares, and that is true for the ADRs here in the U.S. in pre-market trading, one of them being Alibaba, up 5.2% before the bell, Francine.
I like Alibaba. We'll spend a lot more time looking at Alibaba. There you go, 5% higher. Coming up, Jeff Yu, BNY Mellon Senior Strategist for EMEA Markets, and we'll talk about tech in China and elsewhere. And then a little bit later today, Bloomberg also holds a webinar with the Bavarian Premier and leader of the CDU's sister party, the CSU, Markus Söder. That's at 8:30 a.m. in New York, 1:30 p.m. in London, and this is Bloomberg.
Looking at outside of New York for offices. How are you thinking about your footprint as people return to the office and want to work from different places?
Yeah, so it's the new Apollo. I think flexibility is the name of the game. When it comes for us in our business, I think that we've really preached the mantra of flexibility. I think we've proven throughout COVID that we could be highly effective. In fact, if you look at the bottom line, I think more effective than we've ever been in our history. Through a flexible work environment. So as we head back for the fall, we've really preached to all of our businesses to lean in and embrace this flexibility and go where the market goes. We're in a competitive industry. Our portfolio companies are in a very competitive labor environment. And I think businesses that just want to go back to the way things were are missing a huge opportunity to learn from what's gone on over the last 18 months.
Power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could tank the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lyons in New York. Now, our star producer in New York City, Daniel Curtis, put together a chart showing a couple of things that we might want to really be paying some close attention to. The Baltic Dry Index, on the one hand, rising to a decade high in white here. I'll welcome our Bloomberg radio listeners, by the way, on London DAB Digital. You can't see this, but you know shipping costs have absolutely soared, and that's why the Baltic Dry is so high. On the other hand, I've got a blue line that was up there for a while, but has turned over, and this is PMIs. Globally, we're seeing a little bit of a dip led by the US and the UK. So are things turning around? Joining us to discuss is Mark Cudmore, Bloomberg macro strategist and co-anchor of Bloomberg Markets, the European Open. Mark, think about this. What does the rollover in the PMIs tell us?
Well, I think that we've got several things that are there that are interesting. First of all, US was kind of leading the PMI's exuberance that we're seeing on growth over the last couple of months. And US is now leading the downturn. And this is really a kind of a facet or a reflection of the changing dynamics around vaccination rates. US had led kind of vaccination rates the first part of this year. They've really stagnated around 50% of the country is fully vaccinated, just over. And they've stagnated around those levels. And Europe and UK have surpassed them. And that's why the European PMIs are holding up a little bit better than US, and I think this reflects the narrative that we're going to see in the second half of this year. We're changing from a world where global growth, a wonderful global economic recovery, which is being led by the US, is now going to go to a world where maybe it's time for the rest of the world to take the lead a little bit. I think it's not that the US growth story is turning negative, it's just less exuberant, and I think there's a chance that some other parts of the world might hold up a little bit better.
Yeah, I was going to ask Mark, actually, if you look at, the sea of green that we're seeing, could Jackson Hole put a dampener on these operations?
I mean, definitely it could. Look, the narrative at the moment, very short term in the market, is this idea that, hey, wait a sec, maybe if the US growth isn't so strong, well then the inflationary threat's not as bad as we feared, and maybe if the Fed stays super dovish, it's not necessarily a policy mistake. Maybe they'll never need to hike rates again. There's always been a small cohort of the market that have thought that. Now that's still a tiny minority, but it's a growing minority. I don't think this narrative will last. I don't think it's sticky. I think that we will go back to this idea that, wait a sec, the US really does need to kind of move more hawkish in the months ahead. But at the moment, that is the narrative that people are getting excited about as we go into Jackson Hole, which I think is interesting. And there's certainly a growing idea that, look, there's no way Powell will announce tapering this week. Yes, he's going to open the door. Yes, he's going to provide optionality, but he's not going to pre-announce a certain date just yet.
Mark, you know I love extremists, conspiracy theorists, reactionaries. What is this group of people who think the Fed is never going to raise rates again? Because we've had a spate of this in the past post-Great Financial Crisis.
Well, look, it sounds like a real fringe and crazy theory, but just look at Japan. Look at Europe. Like, there's lots of economies in the world that kind of, once they go into this spiral, Switzerland's another good example of this kind of, once they kind of break the zero low bound, get down there, and the US has not broken the zero lower bound, but once we get down to these kind of extreme monetary policy, it's very hard to get out of it. And another kind of factor of this is, the central bank balance sheets. Yes, the Fed started managing to taper a little bit last time, but I think people are pretty critical about how that was kind of handled and wonder whether they'll be able to do it again. So, look, it is a minority, but it's not a completely fringe idea. I think the Fed will have to hike rates again. But how much will they hike? I can kind of have sympathy with the idea they won't be going very far.
Mark, just quickly, of course, you're over in Asia. The PBOC has pledged its own policy support in China. Do you think the buying of the dip in Asia can last?
Look, it's a really tough question. I think it depends what time span you're on. I think that shorter term, look, the market's become very, very discounted, and people are kind of going, maybe there's a little bit of a chance here. But has the regulatory crackdowns, have those policy moves ended? It's hard to have any clarity of this, but I don't see any reason to presume they've ended yet. The issues they're concerned about, expensive property, healthcare, education, these issues aren't resolved. So I'm going to assume that we're going to get more crackdowns in the coming months, and we might get lower prices. Longer term, though, I think China does provide some exciting opportunities, given how discounted assets are there compared to US, for example.
Mark, thank you so much. Smart Conversations on the markets with our very own Mark Cudmore. We'll have plenty more on the markets. We'll also look, of course, at foreign affairs with Afghanistan and the G7 call. This is Bloomberg.
We talk about those NPLs. Will they stay high?
As all of you are very fully aware that the second COVID wave hit India hard and hit India suddenly. So obviously, I would say almost 50 days of the quarter were impacted in a very significant manner. And that has come through on the retail portfolio side. So while all the banks and financial institutions saw higher than expected retail slippages during the quarter, but we do believe it is transitory. We expect moderation in the second half of the year. We've already seen positive trends come through in the second half of June, and July has been much better than June, and I think the same trend has continued in August also. The demand resolution, which was 98%, is already reached 99.5%, or what I would say pre-COVID levels. There is a 26% year-on-year recovery, improvement in recovery.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, Matt Miller in Berlin, Katie Lyons in New York. Matt and Kaylee, we've had some pretty optimistic calls on the S&P 500. We were talking about Morgan Stanley saying, for example, buy some of the travel and leisure stocks, but then this really bold call by Wells Fargo actually saying the S&P will touch 4,850. This would definitely be a record high.
Yeah, just rolling across. Sorry, I mean, Kaylee, you spotted this. I just wanted to point out, it's just rolling across the ticker. So this is breaking right now. And Kaylee, you were saying there are a couple analysts out there who are still forecasting targets of less than 4,000 on the S&P for the end of this year. Wells Fargo had been one of them, but they've now upped the ante.
Yeah, Chris Harvey over there had a 3,850 target on the S&P 500 for a year, and previously he's now upped that by basically 1,000 points. But you still have others like Savita Subramanian over at Bank of America down at 3,800. But the index is already north of 4,400. So I think a lot of strategists are having to play catch up here, given how strong earnings have been. It's a lot more positive a story than I think many anticipated, Francine. So Wells Fargo might not be the only one to up their target in the coming months.
Yeah, this is for the 2021 target. No one cares, Kaylee, because you're getting married on Saturday, and there will be broken hearts across the newsroom, and Matt Miller probably has advice for weddings.
Guys.
Look at that, Kaylee.
Ah, Jack. What
it's
a great
Saturday,
picture.
So we'll have, yeah, beautiful. Congratulations, Kaylee.
China has been focused for a long time now on catching up to the United States in space when it comes to space exploration, and they've really made a couple of really impressive achievements. For instance, in May, China landed a rover on the surface of Mars. It's only the second country after the United States to manage to do that. In June, China sent astronauts to its space station, which is still under construction. China is not part of the International Space Station because the United States worked to exclude China from that. But instead, the Chinese are working on their own. That's scheduled to be in full operation, I think, next year. The Chinese have really come a long way in space. That said, all of that's run by the Chinese government. There is a role for Chinese companies to play in the space program. They're not being as front and center, say, as Elon Musk with SpaceX or Jeff Bezos with Blue Origin. China's companies are playing a more supportive role, I think it would be a fair way to say it, working on things like satellites, rocket launch operations. They're leaving the really big, sexier items when it comes to space exploration, leaving those to the Chinese government.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance, early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Matt, we had that really pretty important call, actually, from Wells Fargo, expecting the S&P 500 to touch 4,850 in 2021. By far, actually, the most bullish call on some of these markets.
Yeah, I think it's really fascinating. And, you know, as Kaylee pointed out, I think we're going to see a lot of other strategists have to follow suit. We have strategists from Stifel Nicholas, from Bank America, with targets of less than 4,000, but everyone else is right around 4,500. Some are a little bit higher, and now this is the highest forecast. I also wanted to point out, we didn't really explain why we were showing the fantastic picture there of Jack and Kaylee. Kaylee will be leaving, obviously, to get married. She's not going to do it on air, so she's going to, this is her last day with us for a little while. And, you know, Kaylee, Francine asked if I had any advice for you, but my advice obviously is not for you. It's for Jack, actually. And it's just so cliche, but happy wife, happy life. He just needs to do whatever you tell him to do.
Perfect.
And then everything is going to be fine.
I hope he's awake and watching right now.
Yeah, if not, we'll send him the clip, as we always do on social media. Kaylee, the reflation trade, apart from happy wife, happy life, which I 100% agree with, reflation trade back on.
Yeah, I'll try to get back to the markets now, Francine. Really strong rebound, strong handover from Asia, and we are seeing follow-through risk on sentiment in Europe and the U.S., though the gains aren't quite as large. Right now, the Stock 600 is just in positive territory by only around 1/10 of a point. We're up about 0.3% on the, or 0.03% on the Stock 600 at the moment, so that is well off session highs, and we are off session highs in futures trading as well, but still positive. We're up about 0.2% on S&P E-minis. A little bit of selling in the Treasury market, yields up just about a basis point. We're sitting at a 10-year Treasury yield at 126, and then of course crude continuing its rebound. WTI up 5% yesterday, up another 1% this morning. Right now trading at $66.30 a barrel. As for some stocks moving in pre-market trading, of course we've had a lot of conversation about the rebound in Chinese technology shares in the Asian session, and that is following through to the ADRs here in U.S. pre-market trading. You have the likes of JD.com up 8.3%. Of course, it reported strong earnings yesterday. Cathie Wood coming in to buy those shares once again. You also have Alibaba, Baidu up around 5% each, and then DD Global up 6.5%. Yes, it may be putting its expansion plans in Europe on hold, but it's still taking part in the broader rally this morning. And of course, another stock we've been paying attention to over the last several days is Pfizer, after the FDA approved its vaccine, boosting sentiment, not just in terms of Pfizer shares, but really across markets. For more, Bloomberg's Ritika Gupta is joining us now. Ritika.
Thanks, Kaylee. You're right. That FDA approval of Pfizer and BioNTech vaccine, a big boost for equities globally, a stark reversal to what we saw last week when there was a slump, a lot of concerns about that Delta variant. But the idea now that this could be globally significant because there's been a lot of vaccine hesitancy within the US, and that could have really dragged on the global outlook. But this is giving more credibility to it, the idea that this could boost the immunization drive and actually make it legally enforceable for companies to mandate the vaccine. And we've already had several companies from Chevron, Facebook, Alphabet requiring workers to get that vaccine. And the idea that this could now encourage more companies to do so, something that President Biden also alluded to. It's also a very positive for that reflationary bet as well. We saw that Russell 2000 outperforming yesterday. It has been underperforming the S&P 500 over the past couple of months.
And Ritika, then we heard from Morgan Stanley buy travel and cruise ship before October.
Yeah, Francine, a bullish call here from Morgan Stanley's Andrew Slimman. He is saying buy into that reflationary trade before it is too late. So he is snapping up those cruise lines, those restaurants, those casinos, some of those energy and reflationary plays. And he really cites three reasons for this. One of them is that basic idea of rates. He sees a floor coming to rates and that they're going to be moving higher over the next few months. He wants to get ahead of that. And of course, higher rates tend to be good for that reflationary trade. Another reason as well is that there's a lot of cash sitting on the sidelines and investors not sure what to do with that money. So he doesn't see for that reason that there's going to be a pullback in the S&P 500 coming anytime soon. And of course, also just that buy the dip mentality questions why investors would go to expensive tech shares or growthier names with those high valuations when you could go for some opportunities in some of those cheaper cyclical and value plays, Francine.
Ritika, thank you so much. Rika Gupta there with some of the roundup that we're seeing from analyst notes. Now, joining us is Jeffrey Yu, Senior Strategist for EMEA Markets at BNY Mellon. Jeff, good morning, first of all. I mean, some of your calls are actually outlier calls, but is this a buying the dip or is this actually the restart of the reflation trade?
I would call it this week, at the very least, a reversal of what we saw last week. It was a very heavy risk-off tone, worries about growth, worries about the cycle, and of course, Jackson Hole. So as we head into Jackson Hole this week, we are reverting to the mean, and at the same time, I think people are just acknowledging maybe this is not going to be an overly hawkish Fed, but I would caution that cyclically the world is still not in a great place. So these really risk-on calls, we need to be clear. Is it because of easy policy or is it because global growth is strong? I'm inclined to think it's simply a policy bet.
So, Jeff, what do you worry about? If the world is not in a great shape, but actually markets are telling us that it is because of vaccination rates and the Pfizer FDA approval, what do you worry about?
So I worry more about the global growth cycle. I mean, over the last 2 months or so, we've been worried about China's regulatory crackdown. We're seeing the tech shares rebound, but consumer sentiment is weak. Yes, the Delta variant's probably under control in China, but has it happened in time to save the October holiday season? As we head into September, is there going to be a late year reflation stimulus coming from the fiscal side? I don't think so. Hence, if we have Europe sort of plodding along, US wondering what to do up ahead, and worried about Delta picking up, and China at the same time not reflating as well, the simple question is, where is growth going to come from? And are we going to head towards stagflation? So I think this is the matter that risk-on markets need to resolve by the end of the year.
Where do you fall in the China debate? I mean, this morning and over the last couple of days, we've heard people saying it's uninvestable. Others saying that's flat wrong. Obviously, we're not talking about for all eternity, but in the short to medium term, if they just change the rules on capitalism the way they have, it seems a little bit dangerous for Westerners, Jeff.
I'm on the that's flat wrong camp. So if you look at the medium to longer term, even the shorter term, we have a new round of index inclusion coming through on the bond side as well. The equity index inclusion, those flows on a passive basis, we are seeing it in our own custody data. And the fact is, yes, you can be squeezed back into the US, but markets are underweight Asia, markets are underweight EM. And actually, that's where a bit of the value is right now. We like Asian currencies, Asian economies, which are trying to reopen. Singapore or Thailand, for example, even Australia, they're starting to change their tone on things. And China will need to reopen as well. But it is a growing market. It will be the world's largest economy over the medium term as well. So flows will head into that direction. From Beijing's point of view, they are learning to communicate better. We will see that too.
Well, what about, where then? I mean, in the U.S., buy the dip has been the right strategy, and the mega cap tech stocks have been the big winners. Are mega cap tech stocks in China a safe bet, or are those the very companies that Beijing wants to, I don't want to use the word crush, but, subdue?
I think mega cap tech, they are facing regulatory issues globally in terms of in terms of having a monopoly over the market position, over data. That is something that's being addressed in the US, in Europe, and China as well. A lot of people have highlighted that China's recent data protection laws, their model of GDPR, right? So Europe actually got there first. So these things will take time to iron out. Now, what I'm looking for in terms of equities right now, one phrase, pricing power. And the reason I think why the US is outperforming right now is the PPI-CPI spread is only around 2 percentage points. So that means companies can pass on their costs. In China and Europe, we're talking about 9 percentage points, right, or even wider. So this actually really hurts companies. They're facing high input costs. They can't pass it on via CPI, so their margins are going to be heavily restricted in the shorter term. So as long as US can actually maintain that cushion, then US stocks can outperform. But again, I ask, where's the cycle going?
Of course, Jeff, the performance of U.S. stocks is largely dependent on the performance of U.S. technology stocks, which, as we know, are pretty vulnerable to higher yields. The question is if we ever do get those higher yields. Do you think so?
So the Fed will take it very, very, very slowly. And then the second point is higher yields at what part of the curve? And I think we need to acknowledge if the Fed is going to start to tighten, you're going to see the long end of the curve. You're going to see yields actually come up because by definition, that's going to restrain the economy. And if these tech companies, if they're looking over the medium to longer term, if their financing cost of capital is more tacked on to the long end of the curve, then they should be okay as well. And I think that's one of the strengths that US mega cap tech will have over the rest of the world in terms of their cost of capital.
Jeff, thank you so much. Jeff Hughes, Senior Strategist for EMEA Markets at BNY Mellon. Now, coming up, hedge funds hot again. The industry is off to its best start since 1999. Investors risk missing out, though. So more on today's big take story. That's coming up next, and this is Bloomberg.
Welcome to El Zonte, known as Bitcoin Beach. This little surf town on the coast of El Salvador is one of the first to go full crypto. Yep, you heard that right. Everything from groceries to coffee to salaries and community projects can be paid for using Bitcoin.
It's actually been crazy how fast it has caught on and how useful Bitcoin's been for everyday people.
Just to buy something as simple as a cup of coffee can be done quickly, painlessly.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua in London and Matt Miller in Berlin. Well, weak returns, dizzying outflows, and poor prospects. That has been the story for hedge funds in recent years, but the tide is turning. As a group, hedge funds are off to their best start since 1999. Marcus Ashworth, Bloomberg opinion columnist, joins us now for more on our latest big take stories. So, Marcus, why are they so hot again?
It's very simple. It's called stimulus, magnificent, huge, unending stimulus from central banks. And look, these are the smartest guys in the room, and they've seen it coming, and they have jumped on it and enjoyed it. If there'll be no point for hedge funds, simply, they would have to all shut up shop if they hadn't had a banner year and a half, 2 years off the back of this.
Yeah, so what does it mean for the broader markets?
Who cares is what the hedge funds would say. I mean, like, they're in...
We care, Marcus.
Their point is that, you know, the big guys do well, and they do exceptionally well in times like this. And as long as basically things keep on carrying on like this, they will carry on doing well. And the rest of us will just have to follow and watch.
Right. Yeah, we'll watch. But is it really phenomenal, or does it come from a lower base?
I think it's phenomenal, this recent... And that's why I worry a bit whether this will be able to continue. If and when stimulus ever stops, then it's a worry for hedge funds. But of course, stimulus will never stop. So get on board the hedge fund that you think you can get on board with. Trouble is that 90% of all hedge fund assets are controlled by 20% of hedge funds. It's a closed, big club, and they're difficult to get into. Wasn't that ever?
Yeah, especially now, Marcus. And the good part about that is I love it when people make more money. I love it when minimum wage jobs start getting paid more. And I love it when hedge fund managers buy 2 or 3 houses in the Hamptons. They're able to charge 2 and 20 again now, aren't they?
No, I think this is very much you've got to delineate between a handful of very successful ones who can possibly charge even more than 2% annual fees and 20% of their profits. It's the smaller ones are still very much struggling, and this is the stories we've had for really since the global financial crisis. If you want to raise 50 or 100 million in hedge funds, you're going to really struggle. You want to raise 3 or 4 billion, and you're a name, it's easy.
And are they really still hedge funds? I mean, are they hedging? Are they long, short? Or what are the strategies that are the most popular right now?
Well, I mean, that's a very good question. I mean, the original hedge was literally, it was to stop people just having exposure to a market being long only. And now, in fact, funnily enough, most of the more successful strategies are actually long-only strategies within hedge funds. So they roll with the punches. They are every new strategy they'll look at. So some of the ones which were popular 10 years ago don't exist, are quite the same convertible bond arbitrage or event risk stuff, but they're starting to sneak back in certain ways. But I think the real aspect at the moment is M&A strategies, and of course, long-short is still always there.
Marcus, thank you so much. Marcus Ashworth there of Bloomberg Opinion. Now, coming up, the boss of the world's biggest index provider has shaking off concerns about the investability of Chinese stocks following Beijing's recent crackdown. Part of our conversation with Henry Fernandez, Chairman and Chief Executive of MSCI. That's coming up next, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lackland, London. Matt Miller in Berlin. Now, global investors have a new tool to hedge China risks. The Hong Kong Exchange has received a long-awaited clearance to offer A-share index futures contracts in collaboration with the MSCI. Now, we spoke exclusively to Henry Fernandez, the chairman and chief executive of MSCI.
There's always been a lot of talk about that with every emerging market in the world. There's been a time in which Indian shares have been called uninvestable, and there was a time in my distant past in which Mexican shares were called uninvestable because of various actions by the federal government in those, or the central government in those countries. We have seen the regulatory compliance wave in China happen every 3, 4, 5 years, and obviously the markets have sell off at the time. But very quickly afterwards, the markets have recovered and gone to new heights. So I think we got to look at this process that the Chinese regulators are going through in the prism of the last 10 years and also across other markets in the world. There's been a lot of criticism of China in terms of lack of compliance, lack of regulatory oversight. So they're now exerting their regulatory oversight. So we criticize them on the other side as well. Clearly, we have to see how it all shakes out. But I think it's important to keep in mind that countries go through periods like this. There's no country that is exempt about this, including Western countries.
Does the nature of the regulatory crackdown, the volatility of Chinese markets and what authorities are trying to do there, does it change the tone and also the timing of discussions and approvals? I'm wondering if, approvals get a lot quicker, are they sped up, when there is this sort of regulatory attention being paid?
I think there has to be some effect of that in times of volatility, for example, like this one. It's even more important, as I said, to have the right exposure tools and risk management tools and hedging tools for the market. But I think this whole process about approving the launch of an A-share futures in Hong Kong has been long in coming. So it was much more of a secular perspective than at the moment in time. We have been working on it for the better part of 4 years. And obviously it came down to the two regulators and the exchanges making sure that this was properly structured and of service to the global community. So as I said, there has been a missing link here in Hong Kong. Hong Kong has developed a great ecosystem of ETFs and obviously the cash market through the Connect program into Shanghai and Shenzhen. Hong Kong is the largest structured products market in the world, including exposure to China, and obviously a great trading center for the yuan. So the big missing link was the derivatives market. So we have been, working with the regulators and the exchange to get to that point in building this ecosystem that all of it together is greater than the sum of the parts. So we're very happy that is taking place now.
An exclusive conversation there with Henry Fernandez, Chairman and Chief Executive of the MSCI Index. Now, Tom Keene, co-anchor of Bloomberg Surveillance, joins us. Tom, if you look at some of the charts, I know you're looking at Apple today, and then, of course, we talked about inflation and the difference to what it means if you're a manufacturing-based economy or whether you focus on services.
This is a sobering thing. We're going through it right now with Jeff Bezos' Amazon. If someone leaves a company, a founder leaves a company, somebody who's so identified with a company, Francine, it will all fall apart. apart. Well, it did not for Apple. 10 years ago today, Steve Jobs, grievously ill, stepped aside at Apple here with the iPhone 4 in 2010. And it was clear, Francine, Apple will fail without Steve Jobs. Let's go to the chart. And it's real simple. We know that in hindsight that did not occur. The illness of Mr. Jobs in 2004, on to his death in October 10 years ago, and just before that, his resignation. I remember the day, Francine, very clearly. And up, and away with Mr. Cook, who's done better than good at 29% per year.
Yeah, I will never forget either, Tom, but I have to ask if Tim Cook has gotten just plain lucky. I mean, if you look back over 10 years, Facebook has outperformed Apple. Tesla has outperformed, more than doubled Apple's returns. Right. Microsoft and Amazon have outperformed. Netflix has more than doubled their returns. So, you know, all of these mega cap tech stocks have done better.
I was asked to go out to Cupertino, buy Apple, I think in 2009 with Emily Hoscotzel. And I sat, Matt, under the platinum record of Gwen Stefani and realized that none of this was luck. It was about a massive delegation of authority by Mr. Jobs. He learned that the hard way in terrific failure. But Cupertino is the mother of all buildings where people delegate authority and then make final decisions after a lot of people think really hard. That's the pixie dust that Mr. Jobs invented.
Pixie dust, and what a wonderful chart. Tom, thank you.
Sure.
Tom Keene, their co-anchor of Bloomberg Surveillance. I know he'll also be looking at inflation. What's on your radar for the rest of the day, Matt?
Well, I'm going to watch Surveillance because I can't wait to hear Tom's words of advice for Kaylee and Jack. You know, she's going to join the Surveillance team today, and then she's going to go off and get married, and you know, I'd say over 20 years, I've taken more advice from Tom than pretty much anybody else at Bloomberg. So I'm interested to hear what he has to say. I'm also going to be watching, congratulations, Kaylee. And I love this picture. And the guy was so smart. He did this at a family picture session, which is genius, because then he had a professional photographer there for the engagement. I'm going to be watching what's going on in this conference call. Boris Johnson has urged President Biden to keep troops in Afghanistan beyond the deadline. The Taliban has said that's a no-go. But we're going to hear today how a G7 conference call goes between these two leaders.
Okay, I'm just looking at markets, Matt, because we had that call from Wells Fargo on the S&P 500 target. They were upped. I wonder whether more brokerages or more banks will actually have to do the same. More Bloomberg Surveillance is up ahead. We'll hear from Eric Friedman of U.S. Bank and Saira Malik, Nuveen Global Equities Chief Investment Officer, amongst others. This is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity? No, so the opening up by the UK government was terrific. We saw, in fact, the day that was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You know, you can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration. By Christmas? I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
What would be the skill set that a CEO really needs to be successful in today's environment?
So I think a good leader needs fundamentally good character and, frankly, perseverance. You just have to never stop.
What were the numbers from the equities division? How well did it do?
Well, first 28% decrease as compared to a very, very good Q2 in 2020 is a good resilience. And it's a decrease that is much smaller than the one we have seen with some competitors.
With valuations where they are, with sentiment as stretched as it is, this is not a market that has a lot of room to absorb bad news when we do get it.
Without financial stability, the Fed can't achieve its goals on inflation.
The expectation is the Fed will certainly signal a much more dovish tone.
This is a Fed that's going to take its time. It's going to measure twice and cut once.
The taper will be announced likely this fall, and by the winter, the Fed will be pulling the trigger on it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrell, Lisa Abramowitz, and Tom Keene, a simulcast on Bloomberg Radio, Bloomberg Television. Mr. Farrell off writing that book, The Drawdown Meditation, widely acclaimed for spring of next year. Lisa Abramowitz here and Kaylee Lines doing duty this morning. And it is a morning of upgrades. Let's begin with the stock market, Lisa Abramowitz. Christopher Harvey with a complex note on the macro and the model of it all. And he goes up a nice upper single-digit return, not 5,000, but 4,800.
Well, the amazing thing is 4,825 is his new projection, but he was one of the biggest bears on Wall Street, sub 4,000 before this. So basically from bear to one of the biggest bulls on Wall Street at a time when there cannot be fast enough upgrades. The question is, what's underpinning that, Tom, given the fact that we're looking at low yields, we're looking at low growth and a lot of potential risks to the outlook, and the upgrades are coming on the heels of that. The expectation we're going to remain in Goldilocks.
But what's so important here, as you correctly state, he goes from gloom to optimism, high single digits, 7-8% return. It is based, Lisa, not off economics and macro babble, Jackson Hole babble. It's based off earnings.
It's based off earnings. It's based on traditional performance. The fact that after you get returns like the ones we've gotten so far this year, it's very rare to see a drawdown. So John can talk about the drawdown meditation. It's also looking, though, at the idea here, the stock market is not the economy. Companies have been able to pass along higher prices to consumers. They've been able to consolidate market share, and they are doing very well despite some of the potential risks.
And with that, Kaylee, is a recovery in oil. Jeffrey Curry making a splash at Goldman Sachs, and now somebody else climbs on board. Brent crude, and the quote right now is 69.52. Brent crude up a number of days here.
Yeah, and UBS thinks we have another $6 or so of upside. They see Brent going to $75 a barrel, Tom, because they see the supply and demand picture actually improving from what the market has feared over the last several weeks. But to the point of upgraded calls, of course, I'm just watching and waiting to see if Savita Subramanian over at Bank of America or Barry Bannister over at Stifel go up from 3,800, because this is a series of strategists now playing catch up to this equity market that is already north of 4,400, which is above the average year-end target for the year. So I feel like more upgrades could be coming, Tom.
Yeah, you know, Lisa, I look at this, and frankly, I haven't done this in a while, folks. You go to WEI on the screen. I learned this function from John Farrow, and it starts with the Dow, Lisa, as it should. And I believe I've got 1 year trailing up 25%. Standard & Poor's up 31%. NASDAQ Composite up 31%. I mean, the people that were looking for single-digit cautious, the pendulum of gloom, it just hasn't happened.
Yeah, and part of this is because of some of the stimulus payments that have fueled a lot of consumer purchases and consumer confidence. Part of it is the vaccine. I wonder how much more of a lift they get after the FDA approved the Pfizer-BioNTech vaccine fully yesterday. This was a big shift, and we are starting to see more companies mandate vaccines. President Biden would like to see more of that. You do wonder, how high can we go, Tom, at a time when we do expect to see peak growth and we do expect to see a deceleration going
Well,
forward?
that's the economics folded in, and Christopher Harvey ignores that this morning. Let me go to the data. We're not going to ignore the data here. And, of course, what an up day yesterday. The VIX down through a 17 level. I consider that crucial. It comes back to 17.30, but nevertheless a constructive start to the week. Futures up 6, Dow futures up 20. It's a fractional move. NASDAQ 100 here on the 10th anniversary of Stephen Jobs' resignation from Apple, grievously ill. NASDAQ 100 appropriately leading the way. In the yield space, 1.26 on the 10-year. I'd note 103 on the 2-10 spread. What that indicates, folks, is continued curve flattening and just sort of a stasis in bonds. Maybe that's what you get in August. Dollar still above 93 on DXY. Euro 117.33. I'm just doing this because Lisa has to walk around all the wedding presents for Kaylee lines to get to the wall.
So many gifts.
So many
gifts. Don't break the china.
Yeah, although many of the gifts may be virtual because everything else seems to be virtual these days as we count down to a virtual Jackson Hole on a Thursday and Friday. 9:30 a.m., another virtual meeting. G7 is going to meet President Biden discussing with his allies, in particular, the situation in Afghanistan. I want to understand the push-pull here in getting out by August 31st. That is the set deadline. However, the Taliban has come out and been pretty cautious with respect to basically saying there will be consequences if you do not exit by then. 10 a.m. U.S. July new home sales and August Richmond Fed Manufacturing Index. Yesterday's existing home sales data came out very strong, stronger than expected. How much do we see that continue in the latest data here for new home sales? And then also, do we start to see those higher input prices crimp manufacturing? I am curious to see that. And 1 p.m., Tom, I'm doing this for you. The U.S. is planning to sell $40 billion of 2-year notes, kicking off an active week of sales. This is actually interesting. I'll tell you why. There was a new study that came out that showed that international buyers accounted for the greatest proportion ever of the previous 10-year note reopening. Basically, they are coming out in full force, and the official buyers tend to concentrate in the shorter maturities. This explains perhaps why yields have remained so low despite some of the economic growth and all of these upgrades that we keep seeing for strategists across Wall Street, Tom.
We've seen so many different opinions here, so many different views on the correlation of equities, bonds, currencies, commodities. And on the equity market, for those cautious, there's an absolutely thundering silence. There's no other way to put it. Eric Friedman joins us now with U.S. Bank, their wealth management and CIO, who's kept his eye on the ball, which is what will be the sum of earnings and at what multiple do you price that into the equity market? Eric, what does a gloom crew get wrong?
Really, Tom, the gloom crew is getting wrong the pace of earnings revisions. And that's what you're seeing across the street right now is people just catching up to a better operating environment. So we're at 24 times this year, and we think it's going to get to $200 on the S&P operating level and 23 times $220 for next year. That brings us to 50-60 for the year end of 2022. That puts us firmly in the bullish camp where we've been. And we think Wall Street has to catch up to that rising earnings number.
So is there any way to sense who's going to be the leadership, Eric, going forward? If it isn't big tech, who exactly will drive this rise even further?
Lisa, right now, based on market structure, you're right. Big tech is really the driver just because of the weighting in most indices, but we do think cyclicals still have a bid attached to them in terms of both equity prices as well as earnings revision. So given this gradual recovery, and if anything, not that we want COVID to continue, of course, but as we see this off on with COVID policies across governments, that actually leads a very gradual glide path of recovery. So if anything, we think this growth could be extended as we continue to deal with the push-pull of COVID. So we think cyclicals will continue to be a place that people have to revise their numbers upward.
Eric, how concerned are you about a hawkish Jackson Hole meeting, especially at a time when so many people are pricing in optimism with the recovery while also counting on the Fed to remain pat?
Well, Lisa, like you, we study the Fed minutes quite closely, and one of the things that really caught our attention was the Fed moved a little bit away from a supply side focus in their latest commentary about inflation. One of the things they really anchored their viewpoints on is that there's been just a supply chain issue that's really hampered the normal transmission of prices, and that actually changed a bit in their latest minutes released last week. So we do think that if there's more of an emphasis on demand plus the supply constraints the Fed is focused on at Jackson Hole, that could lead us to believe that, you know what, the Fed may actually act more quickly. We don't think the Fed's going to act before, let's call it November, December on tapering. We just think they need more information as we delve into the September and October jobs numbers. But again, that optionality may come quicker if we see both supply and demand side concerns from the Fed.
And as for the read through to the bond market, you say fair value on the U.S. 10-year Treasury yield is 1.52%. We're at 126. So where does that 26 basis points of difference come from?
Yeah, Kaylee, I think it's going to be a very, very gradual job opening up by the Fed. And if you look at the pace of change, if you will, going from $120 billion of net purchases a month to something less, we think that's going to very, very gradually nudge up the 10-year rate. But if you look at the term structure of interest rates, which Tom touched on earlier, it's still a very gradual increase. In fact, if you look at 2s, 3s, 5s versus 10s and 30s, most people think inflationary pressures dissipate over the next couple of years. So we do think, Kaylee, it's going to be a very gradual migration higher, probably because of the Fed at Jackson Hole, plus later this fall has to nudge up inflation expectations. We think the bond market will very gradually follow suit.
Eric, you know, I look at this very quickly here. Your upgrade gets you out on the street. You do it differently. You're not sell side. You're much more of managing wealth money as well. Do you have an upgrade in your head on multiple that where you sustain at 23, 24 times or even a higher multiple?
Yeah, Tom, it's one of those things that if we're looking at a 10-year at 152, let's call it pushes north to 175, that may take our multiple down to like 22. But we still think the terminal value, and Tom, you always do a great job of looking at DCF analysis, and that's something we look at quite a bit. We think the terminal value of interest rates is going to be very low for a long period of time. That keeps us at a more elevated multiple, not because we're just hoping that things get better, but because we do think that this is an environment where, again, in this very benign interest rate environment, people will pay up for earnings. So 23, 24 times we think is very reasonable in this environment.
Eric Friedman, thank you so much with U.S. Bank Wealth. An extraordinary morning, and of course, and we'll go to Washington here in a moment. Anne Marie Horton will be with us in the 7 o'clock hour as well. This is exceptionally important from John Hudson in the Washington Post. This was published 8 minutes ago. Where the CI director of the United States, William J. Burns, hugely esteemed, he's appeared on the show any number of times. Director Burns traveled to Kabul and met with one of the Taliban's de facto leaders, Abdul Ghani Baradar. He has been very much in the news. That is just breaking now, but shows some of the discussions going on. It is a short effort by the Washington Post, but very important note that the CIA traveled to Kabul to meet with the Taliban. Please stay with us on a day of optimism for the markets. Futures up 7. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. Vice President Kamala Harris warns that China poses a threat to countries in Asia. At the same time, she reassured countries in the region that the U.S. would not force them to choose between the world's 2 biggest economies. In a speech in Singapore, Harris spoke about the vision for a region built on rules, human rights, freedom of the seas, and unimpeded commerce. President Biden is being pushed by allies to extend that end of August deadline for American troops to leave Afghanistan. British Prime Minister Boris Johnson and other G7 leaders are expected to press the president on the issue today. Still, the UK warned that the president is unlikely to change his mind. Meanwhile, the Taliban warned that it may take action if the soldiers aren't gone by August the 31st. And New York State has a new governor. Kathy Hochul was sworn in just after midnight, becoming the first woman to serve in that role. Hochul takes over after fellow Democrat Andrew Cuomo resigned over a sex harassment scandal. She has to overcome the shadow of that scandal whilst dealing with New York's sluggish recovery and rising coronavirus rates. And COVID's resurgence has hit airlines from the US to Australia to China. Southwest Airlines blames the Delta variant for a rash of cancelled bookings and a slowdown in demand. Meanwhile, Chinese airlines are offering the fewest seats in 6 months. That bright spot in the industry, Europe, the only place where so-called vaccine passports are used. European carriers are now adding more flights. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg Television and Radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
The question is, are we on track to fulfill our objectives of this operation?
to bring out our people, so many of those Afghans who helped us, and so many of those Afghans at risk. And we believe we are.
Mr. Sullivan, the U.S. National Security Advisor, seen often in the recent days with perhaps a changing tone as well. It is a movable feast this morning in Afghanistan, 8.5 hours ahead of us. I'm going to call it the 2 o'clock in the afternoon hour in Afghanistan. This crisis continues. Joe Matthew is following this, of course, with sound on. I can't say enough about the radio effort, Kevin Cirilli inventing the program, and Mr. Matthew driving it forward as well. Joe, thank you so much for joining us way too early in your morning. John Hudson changes a debate this morning. The director of the CIA, someone who's appeared with us, the esteemed William Burns, traveled to Kabul and met with that guy. That guy is Barrader. Why is it such a big deal that the CIA director, our most decorated diplomat in the administration, is sitting down with the leader of the Taliban?
Well, it certainly tells us how the world has changed under our feet here, Tom, in Afghanistan. This Barrader was arrested by the CIA years ago. Now we're meeting in the same room. It all has to do with the deadline. And by the way, I will remind you, that is 1 week from today. We have thousands more people to evacuate. And of course, as we've been discussing, there's now a push to extend that deadline. Boris Johnson is apparently going to ask Joe Biden to do that. Maybe he already did. They spoke yesterday. But the virtual G7 today is where this comes to a head. Can we get everybody out? One thing I will mention is that we're getting better at this, Tom. 11,000 people were evacuated in 12 hours' time yesterday. That's the most we've seen yet.
That trend is there, but in your reporting, Joe, on Sound On, and, as well, and Lisa, Joe's working like a 6-hour day. I don't know what it is about Washington.
You mean 6 hours on air?
No, just 6-hour days. Ben Chili comes back, he does the radio show.
It is August.
Goes home. Joe, seriously, do we know the Taliban now? Because that, to me, is the mystery.
Oh, I don't know that that's true. I think maybe that's part of what's going on in that meeting. I don't think we know what's going on the ground minute by minute either, Tom. This is such a tenuous situation here that we're talking around a lot of stuff that we don't necessarily know about. There's no real-time gauge here. There's no metric or index to let us know what the score is in Afghanistan. Weeks, months from now, we're going to be telling stories about interactions with U.S. forces and thousands of Afghanis and Americans around that airport that'll make your hair curl. They're going to be writing books and movies about this for a long time. I would also revert back to what Liz Cheney said over the weekend. The amount of threat, the amount of risk that these forces are under right now. Imagine what would happen if an American died, if we had a kidnapping, a hostage situation. It would change the entire dynamic that we're discussing here today. That's why you have the CIA director in the same room as the de facto head of the Taliban.
Joe, it's really powerful that we're discussing this and that we're exiting Afghanistan 20 years after 9/11, and we are coming up on that anniversary when we first entered the nation. There is a question of the balance of political pressure at this point to negotiate with a terrorist organization or someone who has been previously recognized as such, a disparate organization, versus trying to enable people to get out of the nation more safely and more quickly, basically to have more visibility. Where is this balance of pressure right now for President Biden?
Well, it depends on who you ask. Jake Sullivan yesterday, who we just saw in that clip telling the briefing room that the U.S. will leave when Joe Biden says so. That doesn't always feel like that when the Taliban is saying, no, we've got a red line here. We want to avoid skirmishes. And the Pentagon is dealing with a lot of different scenarios as to what could happen. One thing that everyone seems to agree on, though, guys, is the closer we get to the 31st, whether this deadline changes or not, the tension is going to rise quite a bit. It's not unlike some of the other debates that we're seeing in Washington right now. When you start inching up on deadlines, things start to happen.
Well, speaking of other debates in Washington, Joe, of course, Nancy Pelosi is going to try again today to break the stalemate on advancing Joe Biden's economic agenda. The moderates are giving her work to do, basically. What is her next step going forward?
Giving her a little bit of heartburn. The irony is not lost on me that Nancy Pelosi is proposing something called the self-executing rule. That, as Steny Hoyer, the majority leader, refers to mutually assured destruction in a family meeting yesterday with the Democrats in the House. They all came back into town, and there was a bit of a stare down, we understand. That family meeting showed some tempers flaring. Some F-bombs were reportedly thrown around. Progressives are very upset with this relatively small group of moderates, now 10, holding this bill essentially hostage. They say they will not vote for the bipartisan infrastructure deal if reconciliation comes first. We added one more lawmaker to that lot yesterday, so 10 moderates. It goes to show how little breathing room Nancy Pelosi has right now with only 3 seats.
Next to none. Joe Matthew, thank you so much. Greatly appreciate it. Important conversation in Washington. Sound on Bloomberg Radio, 5 p.m. Tonight with Mr. Matthew. Lisa, as Joe was talking, there's the headline coming off the Bloomberg. It's featured as a red headline. Iron ore rockets, and it's about monetary accommodation.
The idea here, the iron ore jumped at 10%. This is expected support from the People's Bank of China. Remember that yesterday, or actually last night, they vowed to support credit as well as stabilize monetary growth, and this comes after shrinking the credit supply over the past few months. This has been the big question. We had one key rate cut from China that never happens. There always is more than just one. And so how much accommodation are they willing to give an economy as they try to shift to a less credit-focused kind of ecosystem into something more sustainable? The answer is it looks like they're not quite ready to maybe ease off the pump, and this means that there might be more investment than people had previously expected.
Kaylee, moonshot in 2 days, 65 to near 70 on Brent crude. It speaks volumes.
Yeah, a huge rebound in the commodity complex broadly, Tom. It's not just iron ore, but with this, I would also note that it's not just about the picture of economic growth and demand in China. The demand also comes from the steel producers, and steel is something that China is cracking down on as it tries to become more green, get to climate neutrality by 2060. China has its work cut out for it, and so the environmental factors that are at play here, other than just broader economic growth, is something that you have to consider with iron, and I wonder for that reason how sustainable this rebound is going to be, Tom.
We want to reset this morning, and we do so, folks, 2 days in a row with markets up 7, Dow futures up 36. Abramowitz just sent me a note and said, Tom, it's not about the equity market, it's about bonds. And Lisa, I got to go back to a couple charts I've seen in the last 24 hours, thank you, Zero Hedge, of the complete separation of credit from equities. It's absolutely stunning. In honor of Rod Gilbert, the hockey stick turn in yield and price versus what's going on in the moonshot in the equity market.
Well, you had seen a little bit of weakening, although, honestly, we didn't talk about this with Eric Friedman. He had so much that he had changed his view, and he actually got bearish on credit at the same time that he upgraded his expectation for the S&P.
How does that happen?
Basically, it is a question of the Federal Reserve. It is a question of how much more they're going to backstop this market. At what point do we look at credit as an indication of corporate health and balance sheet discretion versus something bigger or having to do with just simply monetary policy?
I'm going to go to the Farrow rule. This is John Farrow, folks. Look for drawdown meditation, the Farrow way, coming out spring of next year. Farrow says look at a 127 10-year, and it has not moved lower, which gives optimism to the bulls. Futures up 7, Dow futures up 44, 35,325 level on the Dow. Stay with us, much more on radio and television. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Bloomberg Surveillance, good morning, everyone. Kaylee Lyons in for John Farrow, Lisa Bramlett, and Tom Keene. Thank you for being with us. The markets, better than good. We've got a lift to the markets. Futures up 8, advancing off of yesterday's joy, very different from last week's angst. The VIX 17.22, and I do mention yields 1.27% as well. I guess this is the point where we begin a look back. It's September 11th. There are those that have younger children explaining to their younger children exactly what was September 11th, and to many of us, it is a collective memory. Everyone will pontificate. Only Foreign Affairs gives us wonderful expert opinion across a wonderful cross-section. Who won the war on terror? I really can't say enough about this. Daniel Kurtzfalen joining us, driving on the legacy of all that have done foreign affairs. Folks, an annual subscription, I believe, is the price of an overpriced martini at an overpriced restaurant. Throw it at your offspring and say, shut up and read this. Daniel, congratulations. Ben Rhodes is in there, maybe from conventional Washington, some other people as well. And I'm thrilled to see the Marine Elliot Ackerman in there with Stravitas writing my book of the summer. And Elliot Ackerman makes no bones about it. We are a nation preoccupied. We are a nation in fatigued. How tired is America?
Well, it's appropriate in some ways that we're seeing this messy, chaotic, in many ways tragic withdrawal from Afghanistan right as the 20th anniversary of 9/11 is approaching. As all of us who remember it know, it was such a cataclysmic event for American politics, for American foreign policy, and it really shaped the way we used our power in the world, the way we thought about the rest of the world for so long. And in some ways that it seemed to really drop out of the foreign policy conversation in the last few years. In Afghanistan and what we're seeing now, the scenes from Kabul are really a reminder of just how much it has changed the world, just how much it has changed the sense of American power and ourselves.
There's so many ways to go here. Stravitas' essay of a few days ago in Time magazine, what Zakaria wrote in the Washington Post, and to me the exhaustion is an exhaustion of theory or belief. In putting this edition together of Foreign Affairs, could you discover a modern American foreign policy theory? Does it exist?
Well, if there's a theory or a tendency, it may be one of overreach and hubris and these kind of maximalist goals that are eventually walked back in time. If you remember back to the days after 9/11 and the declarations coming from President Bush at the time, but from lots of others about the agenda we had in the world and the way we were going to achieve this ultimate victory in the war on terror and transform the Middle East and transform our own society, all of those goals look so fanciful in retrospect. And what we've come out of, if we look back at this period, as you see in these essays, is something that in some ways would be surprising if you go back to the days after 9/11. We haven't seen the kind of mass casualty terrorist attacks in the United States that most people thought would come repeatedly after 9/11. And that in some ways is an achievement, but look at all the costs that have come with it. You see in Elliot Ackerman's essay, the one you mentioned, just how much it has affected American service members and the American military and American power. You see in Ben Rhodes' essay, just how much it has changed American foreign policy. So we can, in some ways, look at certain kinds of achievements and certain kinds of victories of American policy in that period. But if you look at the declarations and ambitions that we had in those days right after 9/11, what we've had to pay for those achievements is really staggering.
And there's also the question of how the concept of the war on terror has changed amid a changing world. What do some of the expert writers weigh in on that front?
Well, one of the most striking things about the Afghanistan withdrawal, which I think is a theme that runs through a lot of these essays, we closed the issue, of course, before we saw what was going to happen this week, but most of the writers really anticipated what this outcome was going to look like, is this moment when the United States is trying to balance goals in the war on terror and the kinds of considerations that drove us into Afghanistan in the first place and that kept us there for 20 years against what are seen as the kind of challenges of our day. China, technology, great power competition. That's what people in the national security and foreign policy worlds are talking about now. But as you see in these essays, the response to the war on terror has shaped even the way we think about some of these great challenges today. So even as it's passed out of the kind of core of American foreign policy concerns in many ways, at least before Afghanistan became the headline story of the day, it really has shaped the way we think about the world and about our own power.
As we discussed this morning, the idea of top-level officials in the United States meeting with Taliban officials, the idea here of the legitimacy of groups previously designated as terrorist organizations, how much are we at risk in the Western world, generally at risk from terror threats in Afghanistan, where we have that much less visibility on the ground?
That is the big question of the day, and it's one we just don't know. Bill Burns, the CIA director, who, as you alluded to, was meeting with the Taliban leadership in Kabul yesterday, a really extraordinary meeting given the history of these past years. He has said very, very explicitly that we're going to face